It's a test for the market in terms of not just SpaceX, but the ripple effect across the rest of tech.
Everybody's investing in it. They've really hyped it.
The majority of the opportunity here, as laid out by the company, is really in the AI compute space.
Portfolio managers are now struggling on how to allocate these new offerings.
Just because something is a very hot IPO doesn't mean that in the 1 or 3 months that the returns are always as incredible as the trading on the first day.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday, preparing for launch.
3, 2, 1, ignition. And liftoff.
We've got to get the IPO, SpaceX IPO going pretty soon, I think.
This feels like a milestone moment.
This is a war for capital.
Anyone that's owning SpaceX, you're buying it for the Musk factor.
The SpaceX IPO raising a record-breaking $75 billion. Shares indicated higher by more than 35% in shadow trading, putting Elon Musk on the brink of becoming the world's first trillionaire. The stock begins trading later on today.
By any measure, this was an incredible success, and it sets the stage for the other IPOs that are coming down the pike with Anthropic, OpenAI, and others. A lot of questions still swirling. A lot of people are going to be skeptical, wondering if people are buying to get ahead of index inclusion, which is going to be rapid. The idea of retail investor participation, which was far beyond what people expected, whether that's a positive sign or just a sign of the cult of Elon Musk. Once again, people will have different opinions about this, but what it highlights is people believe that the idea of missing out on this type of opportunity is more punitive than potentially getting in.
This is such a polarizing stock, and it will be for a long, long time. And through the next 3 hours, there will be two opinions that dominate the conversation, the polar opposite of each other. One opinion will sound like this: it's a bullish bet on the future, led by a CEO that you should never bet against. And the other opinion will sound like this: it's an unprofitable company, trading at 90 times sales plus, the promise of tech that doesn't exist yet, and maybe never will. And they're the two opinions that will dominate the next 3 hours.
And when you look under the hood, what actually is the moneymaker, right? What is this company? Is it selling space or is it selling connectivity? Is this Starlink with a space wrapper? And essentially, if you take a look at where the revenues come from, it is entirely from Starlink. I mean, you're looking at the actual $4.42 billion of profit coming from there. Everything else is a loss leader. The AI hopes and dreams, the CapEx is $12.7 billion versus a loss of $6.4 billion. I mean, you start looking at these numbers, and you can see the skepticism. But is there an alternative? At a time that is inflationary, where cash is not an alternative, that is part of the reason why people are saying maybe it's worth it. Maybe it's worth it to potentially go into this.
You're worth it, Bramo.
Thank you.
The IPO getting an assist this morning from the White House in a major way. Check out futures this morning, much, much higher. Check out crude, much, much lower. The president saying this yesterday: we've just made a great settlement of the war with Iran, and we're going to be subject to finalization of the documents, which we should get over the next few days. Probably have a signing maybe in Europe. The latest headlines coming out of the team in Europe and beyond is that US and Iran are nearing a peace deal around the G7 meeting next week. Look at crude this morning. WTI and Brent declining off the back of this.
What's fascinating is when there were initially headlines saying that the U.S. is going to strike even harder in Iran, the move was infinitesimal. And we said around this table, the market doesn't believe this. They don't believe that this is potentially going to be the re-escalation everybody was worried about. And sure enough, they were right. And frankly, the downside was nothing compared to the upside in markets on the announcement of some sort of ceasefire, even though we've been here before. So the idea, to me, the takeaway is the market action represents that people are more leverage to the upside of this, are more looking for the upside of this, and are ignoring some of the negative news that potentially could prolong this conflict.
Back in the 80s on Brent, I've been scarred. Keep going back to April 17th. Strait's going to reopen. Strait didn't reopen. At this point, I'll believe it when I see it, but I'm told we're getting closer, and we're getting closer.
Well, when you take a look at the state-linked media agency coming out of Iran, they were talking about the 16 points that Iran was agreeing on. One of them was an immediate reopening of the strait under Iranian guidelines. I mean, there are so many questions. If you want to look at the details, just don't. You know, the less you know. Chris Verone, I am channeling you this morning. But if you look at the details, you think, what have we actually accomplished? Because ultimately, these are the same sticking points that we had maybe 2 months ago.
Stocks up by 0.5%, call it 0.6% higher on the S&P. Crude down by 4%. Coming up this hour, Steve Auth of Federated with SpaceX set for its record-breaking debut. Pierre Ferragu of New Street Research, the first analyst call on the stock. And Justice Parmar, Fortuna Investments, as we test the so-called Elon premium. We begin this hour with stocks holding steady as SpaceX prepares to make the biggest market debut of all time. Bloomberg's Ed Ludlow is breaking down the numbers for us. Good morning, Ed.
Yeah, good morning, John. So steady, $135 a share, 555.6 million shares, the valuation 1.8 trillion. And this was atypical. This was unusual, right? There's still a lot that will come out in the wash and needs to be worked out on the allocations. But generally speaking, Elon Musk and the rest of the SpaceX C-suite controlled this. The bankers will get paid, but it's not clear to me how much work they did on it. Like, there was a lot of company control. And the idea on the retail allocation is that they believe, and the audience of Bloomberg Surveillance may not like this, but the retail investor understands the story much better than Wall Street does. It was really interesting to hear you and Lisa talk about this idea about the bull case and the bear case, or whether you believe the Elon Musk part of the story is a referendum on him, or you focus on the numbers, the lack of profit, and how distant this is. You know, SpaceX has been pretty clear. Behind closed doors, yes, but that if you are investing in this IPO and participating, you are doing it on a very distant future and timeline. There's this idea that it presages other IPOs, Anthropic and OpenAI, but what I found very interesting in the last 7 days, and constantly being on the phone with everyone around the table, is that they see SpaceX as an asset one of one, right? A much more diversified company than people give it credit for, but very different to Anthropic and OpenAI. And the idea that capital markets will support all three, that there'll be some IPO window, actually, I don't think that is as widely a held view as perhaps we previously believed.
So, Ed, it's a record-breaking IPO, without a doubt, but it's the second biggest equity capital raise of the month.
Exactly.
Alphabet with an upsized $85 billion in the last couple of weeks. And I just wonder how quickly Elon Musk and SpaceX will come back to the equity market to tap it once again.
Quickly, right? And one indication of that was the reporting we did that even prior to trading today, they'd already got IG status from the three main agencies, credit rating agencies. This is not a race to IPO, it's a race for capital. And everyone is very clear and very sort of comfortable with that idea that you have to make a decision. There's not infinite liquidity in the world. People, and in part, that's why, you know, when we were talking endlessly about the indices or indexes fast-tracking SpaceX inclusion, and the idea there'll be this massive passive rebalancing, like that is a factor, but also they'll come back to the capital markets very quickly in conjunction with Alphabet that's already gone, but probably also, like, you know, the reporting about Meta, Amazon across debt and equity. It's a really interesting time. But again, I was listening to what Lisa was saying. Every 8 days, somebody phones me, somebody already on the cap table at SpaceX, and says, I actually don't put too much on the software part of the prospectus and the 26.5 trillion TAM on enterprise AI. This is a much more diversified business currently. They've played a blinder, becoming a neo cloud by renting the capacity to Anthropic and Google, but they are putting themselves in the same capital race as the hyperscalers are. You know, raise money, deploy CapEx.
Ed, it's good to see you. Looking forward to your coverage throughout this morning. Ed Ludlow in New York. It's kind of nuts, isn't it? Biggest IPO we've ever seen, almost 3x the previous biggest, and it's only the second biggest capital raise, equity capital raise of the month so far.
As Ed and many others have said, this is a race to capital, and you got bigger ones in line that want to get in first. Congratulations, Alphabet. You managed to just front run absolutely everyone, and let's see if you can do it again. Here's
the view on Wall Street this morning. Steve Auth, the Federated, writing, a flood of supply is coming, starting with SpaceX today, but the gap between equity returns and their public market alternatives remains large and should continue to expand. Steve, welcome to the program. Great to cover this record-breaking story with you. What does this market mean? What does this IPO mean to this bull market, Steve? Can you frame that for us this morning?
Well, we're at the beginning of a new frontier here, and it's very exciting. And it's quite likely real in our view. I mean, our guys have been down there, you know, Starbase. This is a real company. It's got hard assets, which is something we think is coming back into favor now. And it's opening up a whole new world. It's hard to evaluate it entirely, but on a price to sales basis, it's actually not as crazy as some of the deals and some of the evaluations of things like the SaaS companies 5 or 6 years ago. So yeah, we think this is very real and is likely to be a pretty successful IPO.
Steve, what are you buying when you buy SpaceX? Are you buying the space shuttles that are going to take us to Mars? Are you buying data centers in space? Or are you buying Starlink and the promise of XAI?
Well, Starlink gives you a kind of base, Lisa, for sure. Kind of the cash cow. I mean, it's hard to call a business growing that quickly as a cash cow, but the rest of the business is potentially going to be revolutionary. I mean, if you can, and they have already just demonstrated, they can bring stuff back and forth to space. The cargo space that they've got there is pretty large, and it lowers the cost by thousands of multiple points to bring things back and forth to space. And we think data centers, I mean, okay, Elon is a little bit, optimistic, but data centers in space are not that far off. I mean, the biggest problem they've got to solve is the water, the cooling problem. But they've got ideas of how to do that. The cost of data centers is enormous right now, the energy flow, et cetera. If you can eliminate that, you change everything. So that's just one application, but could be pretty significant here. I'm not Elon Musk. I don't have the creativity to come up with this stuff, but I'm sure people thought Thomas Edison was nuts in his day as well.
Yeah, I'm looking up spacesuits actually that can take me to Mars, and they cost a ton of money, but they also weigh about 300 pounds. But extravehicular mobility unit, maybe I should invest in one. Steve, I wonder what this says though about the broader moment, not just investing in SpaceX and some of these other IPOs during a race to capital, but the alternative, which is cash in an inflationary environment. Is there a feeling that it is better to potentially jump on a train that could end up being a bit speculative, the remaining in cash that'll get blown out from inflation?
We think that one of the things that's happening here, Lisa, when people complain about the amount of capital raises going on in the U.S. right now, first of all, they're dwarfed in terms of the size of the U.S. equity market. So SpaceX, $75 billion. The U.S. equity market is $75 trillion. That's about 1,000 times higher. Cash, you mentioned, $7 trillion. Fixed income markets, 150 trillion. You've got 150 billion, sorry. And then you've got, foreign equity markets are about $55 trillion. So there's a lot of money outside the U.S. and outside of the U.S. equity market. And we wrote a piece a few weeks ago about this. Maybe equities don't have a bond problem. Maybe bonds have an equity problem. I mean, if you look at the returns on fixed income or cash relative to equities over the last 5 years, it's been really, really low. I mean, in fact, fixed income is flat over the last 5 years. And that included a big downdraft in 22, which was actually worse than the downdraft in equities. So we think what's happening here is the markets are starting to figure out that the U.S. equity market, the way it's structured, the kind of companies that we've got here, the productivity gains that are going on, the unprecedented margin expansion. As you know, we just raised our out-year earnings estimates again to 450. We think it's really quite realistic going out 2 or 3 years here. So, yeah, the equity market looks pretty good to us. We're not going to be shaken out. We've been telling our clients, look, there could be a pullback here. There's all these different reasons. You guys, are covering them really well, including the Fed chair new and the midterm elections and the Iran war is up, it's down, it's in between. And there could be a near-term correction, but we don't want to sell rallies here. We want to buy dips, and that's what you do in secular bull markets. And sometimes it's hard to recognize you're in a secular bull until you were in a secular bull, but we're in one right now.
Steve, can we wrap it up with a 12-month bet? No money involved. If you had to take a bet right now, your best guess, what's going to outperform in the next 12 months? The NASDAQ with those IPOs included, or the S&P 500 without them?
S&P 500, we're expecting a broadening out here. In fact, we've already had a broadening out. Year to date, small caps are way ahead of the S&P 500. And we anticipate, that the broadening out is going to happen. The companies feeding SpaceX are going to do well. The whole infrastructure is growing out right now, and we think that's probably good for the broader market.
Okay. Steve, good to see you. It's great to catch up, buddy, as always. Thank you. Steve Auth there, Federated, on this record-breaking SpaceX IPO.
You know, I'm really getting into this NASA Z2 spacesuit. I'm thinking about investing in it for my sons because I think it could actually be really helpful when they're fixing the data centers in space.
This is the conversation we'll have throughout this morning. How do you value a company like this? If you took Elon Musk out of it, would it be worth $1.8 trillion?
Not this conversation. You're just going to ignore that. Move on.
I'm going to try and make it a little bit more sophisticated.
Good. Okay, carry on.
Are we valuing this on Starlink? Is it a comms company? Or is it XAI? Is it orbital data centers, etc.? Is it an AI infrastructure company? What is it? What will it be? What is it now and what will it be? And how do you value it with that in mind?
It seems like the overlay of the promise of space, which, as Steve was talking about, there are some really real prospects. And frankly, the reason why Elon Musk's SpaceX has done so well is because they can take satellites up to space for other countries and entities to create connectivity. If you can leverage that, that could be, a moonshot.
A moonshot? Going to get plenty of puns this morning, aren't we? Futures this morning positive by 0.5% on the S&P with an update on stories worldwide with your Bloomberg brief. Isabel Lee has more. Hey, Isabel.
Hi, John. President Donald Trump saying, quote, "We ended the war with Iran." The president saying a deal will be signed imminently. Iran semi-official news agency MER saying the U.S. and Tehran are still negotiating a potential agreement. And it's officially the biggest initial public offering of all time. SpaceX raising $75 billion in its IPO, pricing more than 555 million shares at $135 each. At that price, Elon Musk's company has a market value of about $1.8 trillion. And of course, this historic IPO is set to make Elon Musk the world's first trillionaire. When combining his stake in SpaceX with his Tesla holdings and other investments and properties, his net worth tops $1 trillion, John. That's your Bloomberg brief. John?
Crazy. Absolutely crazy. Isabel, thank you. Appreciate it. Up next on the program, SpaceX preparing for launch.
Anyone that's owning SpaceX, you're buying it for the Musk factor.
I think there's plenty of money for these iconic IPOs. Feels like a milestone moment.
Up next, we'll catch up with Pierre Ferragu of New Street Research, live from New York City this morning. Good morning. Record-breaking IPO, an unbelievable amount of money, $75 billion raised. The previous record was about 29. That was Aramco. We have dwarfed that, absolutely dwarfed that with this one from Elon Musk and SpaceX. For the broader equity market, better than good this morning. We're up by about 0.5% on the S&P, on the Nasdaq up by a similar amount. Crude with a helping hand, an assist from the White House. Crude down by close to 4%. We're back in the 80s on Brent, as we drift closer and closer to a signing ceremony, we're told, between Iran, the US and others.
Yeah, it's going to happen next week at the G7 meeting because now everything is fine after the momentary threat to potentially escalate quite significantly. The idea that we're seeing the lowest oil prices going back 4 months gives you a sense of just how much people have moved on. And ultimately, you can tell by the fact that the market didn't bid up prices of oil significantly yesterday and the threat of escalation.
Yep.
You can see where the bias is.
They moved on. A long time ago, they've moved on even more. Under surveillance this morning, SpaceX preparing for launch.
Anyone that's owning SpaceX, you're buying it for the Musk factor.
The majority of the opportunity here is really in the AI compute space.
Feels like a milestone moment.
I think this cycle is so powerful that you have to be involved in these. It's just a matter of how much and what the timing is.
I think there's plenty of money for these iconic IPOs.
This is a war for capital.
SpaceX making a historic public debut, raising a record-breaking $75 billion, the biggest IPO of all time, pushing Elon Musk closer to trillionaire status. Pierre Ferragu of New Street Research becoming the first analyst to initiate coverage of the stock with a buy rating and 165 price target, writing the space opportunity is large and diversified. Our $2.3 trillion valuation assumes they win 75% of this market. Pierre joins us for more. Pierre, good morning, sir. It's good to see you.
Morning, John.
We've got comms, launch, AI infrastructure. What's driving the valuation of this company?
It's an excellent question. When we looked at that, we figured out about half the valuation of SpaceX today comes actually from combining artificial intelligence and space. Because space today is a lot of cash flow. It's very cash generative. The telecom business is generating a lot of cash. And if you have access to your own cash flow in AI, you can buy your own infrastructure That makes it much cheaper for you. You don't have to pay a margin to a cloud provider providing you your infrastructure. You have to imagine Anthropic and OpenAI are raising money in the market to pay the bill, but they can't buy their own data centers. And XAI is by building their own data center, massive competitive advantage. And then you look at that further down the line, in 5 years from now, SpaceX will be in a position to really put to orbit gigawatts of data centers.
Well, let's sit on that story, because that forms the valuation in a major way.
Yes.
Does the technology exist that forms the basis of that story? Or is this another full self-driving over a Tesla? That's what the critics will ask this morning. How do you address that question?
So you look at the technology roadmap of the industry today, which is about stuffing more and more compute power into bigger and bigger integrated packages. This is really what space needs in terms of compute. And this is in the roadmaps today, and it's like, it was in the roadmap before we looked really seriously at space. So I think there is no significant technology roadmap.
At this point, how much more money do they need to raise for CapEx? Because I'm looking at some of the CapEx expectations for the different units, whether it's AI, space, or connectivity. You're talking more than $20 billion. I mean, how much more are they going to tap the market for?
Yeah, it's a good question. So we have our own forecast. We are not in this syndicate. We are not like in the game of like pushing up the forecast as much as we have. To give you an idea, we think the company tops like $200 billion of revenues in 2030. At that level of growth, which is less than what the syndicate is pitching, we think the company can sustain itself without raising more money. If they want to grow faster, if they can grow faster, they could go back to the market to raise more capital. And it's mostly going to be about building out the data centers.
How much is SpaceX paving the way for OpenAI and Anthropic versus a completely different story that is hinged to the hopes and dreams of Elon Musk and the cult factor among retail investors?
Yeah, it's a good question. I guess it's a very, very unique story, equity story. You see like 4 times oversubscribed. It's $250 billion interested in investing in SpaceX. Investors we speak to are more interested in understanding like the broader space opportunity than the specifics of the AI story. But they come to realize and understand that actually it's combining space and AI that really creates the opportunity.
What is the Musk premium here? If you took him out of this story, what's the company worth?
Well, I guess that you wouldn't have rockets flying without him, right? So the Musk premium is extremely significant. It's critical simply because the timeline, only Musk can put up the timeline and say, oh, I'll have all these data centers in orbit in 3 years.
And people believe it too.
I don't know. I think people accept the idea that if Musk says, I'm going to do it in 3 years, people are like, there is a very high probability it's going to happen in 7 or 8 years. And then, it's a whole discounting game where the Musk factor is you accept a discounting on a much longer period of time, but that's because it's Musk. That's the way Tesla is trading today.
What happens if he leaves?
Is he going to leave? No.
Well,
it's like...
Thank you. I appreciate it.
It's a good question. He never left, so we don't have a precedent for that.
No.
So the answer is just no.
Musk's talent is to attract talent. So like the density of talent at X, at SpaceX, at Tesla is incredible. So the days he leaves, he's not driving anymore. I mean, like we were wondering the same about Apple a decade ago with Steve Jobs, and so we will have to see.
I've only got 45 seconds left, so this is a few words if you can. How quickly before we combine Tesla and SpaceX? We're talking months, years?
That's a good question. I think right now is not ideal because Tesla is spending anyway a lot of money on their own and on the Terafab. Some of that will help Tesla. And then once they do that, it's very interesting to have access to the free cash flow of Tesla. And then there is an element which is politics, which is like it's probably easier to do it before the end of 2028 than later.
Pierre, it's good to see you. Thank you, buddy. Pierre Ferragu there of New Street. What an achievement by Elon Musk from New York City. You're watching Bloomberg TV. Futures positive this morning, up 1/3 of 1% on the S&P, back on track on the Nasdaq, up by 0.2%. The equity market rally fading just a little bit in the last 15 minutes. We'll get to the Iran factor in just a moment. Yes, we have to talk about it.
I know
that some of you don't want to talk about it. Some of you being Bramo, but we'll spend some time talking about it.
It's totally important. It's just an absolutely frustrating, it's a maddening story.
I agree with you. I totally agree with you.
Yeah, I think the market
You won't get pushback from me. I think everyone's absolutely exhausted by all of this. The equity market back on track and heading towards a 10th week of gains out of the last 11, which is crazy. Let's turn to the bond market. 2s, 10s and 30s. Yields looking like this morning. Things are quiet, unchanged. 2s at around 4%, 10s around 4.45, 30s a dip below 5%, 4.95. Helped out by this move in crude, which has been declining in the last 24 hours or so. Crude down about 3% to 87 on Brent, back in the 80s, which is crazy. 85 on WTI. Bear in mind that we were $10 higher Monday morning on Brent crude. Getting closer to a deal, I'm told. The contours of that deal, though, bit of pushback from Iran about what will and won't happen in the next few weeks.
The idea of the Strait of Hormuz going back to the way it was before the war, where there was free passageway, is not in their cards. They would like to have some control over the Strait of Hormuz, which makes sense given the fact that is a huge point of leverage. Again, we go back to how much has actually been settled with these negotiations. There has been, though, a change in the understanding of the supply-demand dynamic, and Dan Stroyven over at Goldman Sachs put out a note saying he's actually downgrading his expectation for the price in 2027 because you have some of the countries in the region increasing their output, and you have a structural decline in demand coming from places like China.
For now, at least.
For now.
They can change. You know, but I'm with you. The electrification of China,
Yeah.
etc. We've seen demands drop. They've pulled back a lot.
Which is part of the reason why you haven't seen perhaps a bit of a spike upward in the face of some negative news.
Brent crude this morning down by about 3%. We'll spend some time on that in a moment. On our radar this morning, our top story, the SpaceX IPO raising $75 billion in the biggest market debut of all time. The record offering at $135 per share, putting Elon Musk on the verge of becoming the world's first trillionaire. BlackRock seeking to buy at least $5 billion worth of SpaceX shares. Sources telling us here at Bloomberg the firm joins Middle Eastern investment funds offering to place orders of $1 billion or more. Shares experiencing a surge in shadow trading and pre-listing markets. Derivatives from brokerages like IG indicated an expected opening price of $180 to $184, a 35% premium above the $135 IPO price.
Yes, this is going to be really important to watch because A, it sets the tone for the other IPOs that are coming to market. B, it raises questions about the way this was done. A price set before even the roadshow, which is notable. And C, it really highlights just how much demand was left on the table. You talked about skepticism about how far oversubscribed this deal was. That is always what people say because you put in a greater ask for the allocation because you know you're not going to get it. If you do see a rally like that, you might be able to conclude that that was actually real demand ahead of the inclusion in indexes and ahead of what a lot of people are expecting is a sea change in our understanding of our place in the universe.
In some ways, this is the Elon Musk IPO. In some ways, in fact, in many ways. We were just talking to Pierre Ferragu. Without that individual, this company isn't where it is this morning. This stock isn't where it would be this morning. There is only one man that could have really pulled this off. So it's difficult for me to look at this story and say, this is what it means for the broader market. I don't really know. This is what it means for everything that Elon Musk owns, because there are so many people that follow him and are willing to bet on him.
The idea, though, that they're willing to bet on him right now, given how much money he's raised in all of his companies, gives you a sense that people want dreamers right now. And I don't want to get too philosophical, but there is $8 trillion in money market funds right now. I was just looking at this. That's up from $3 trillion back in 2018. It has been a huge climb. If people want to put that money to work at a time that everyone is saying is an industrial revolution, well, why wouldn't they bet on feasible propositions that could potentially be game-changing? I mean, it's an infinite universe, literally, in terms of the market share if you do monopolize space.
It's a massive bet on the future. Elsewhere, we've got to talk about this story. The president insisting a deal with Iran is very close after reversing his threat of more military strikes.
We just made a great settlement of the war with Iran, and we're going to be subject to finalization of documents, which should get done over the next few days. We'll probably have a signing maybe in Europe.
Iran state media reporting Tehran and Washington are negotiating a potential deal. The details still not yet finalised. Tyler Kendall has the latest. Hey, Tyler.
Hey, John. Well, new this morning, senior G7 officials tell Bloomberg News that a senior Iranian official did indicate that a deal could be likely and signed as soon as this weekend in Geneva. Yesterday, President Trump indicated that Vice President J.D. Vance could take part in any such ceremony. The president himself isn't expected to land in Europe for the G7 summit until Monday. But our reporting does caution that at this point, Iran has not indicated that it is ready to sign and that previous diplomatic progress hasn't materialized. We're trying to figure out exactly what could be in this memorandum of understanding amid a flurry of reports from Iranian state media this morning that the two sides are working on apparently a 14-point agreement, but some headlines crossing that could risk derailing this progress, including this one from just moments ago, that Iran says that it will not restore the status in the Hormuz Strait to what it was to pre-war levels. Other contingencies that Iran has demanded in this agreement include seeing the U.S. unfreeze at least half of its frozen assets and oil sanctions need to be lifted. Other than that, we also are learning that Iran is still demanding that a ceasefire needs to extend to Israel's front against the Iranian-backed militant group Hezbollah. These are all risks here that could stall the progress going forward, though at this point, the White House says that diplomacy is still viable.
Tyler, stay close. I have a feeling we'll have more headlines between now and the end of this programme. Tyler Kendall down in Washington, D.C. To build on the conversation, the former Deputy National Security Advisor Victoria Coates writes the following. President Trump has demonstrated that he can bomb what he wants, when he wants in Iran, and there's little or nothing the regime can do about it. Victoria joins us now for more. Victoria, welcome back to the programme. The US has demonstrated repeatedly that it has military superiority over Iran, both in the skies and intelligence and so on and so forth. How do they ensure, the US, that they translate that superiority into a superior deal that benefits the US?
Well, good morning, John. Yeah, I think we've actually seen that play out in real time over the last couple of days. And I admit I am a little nervous that Tyler's going to pop back up with another changing headline in this current news cycle. A lot of things are shifting. So take all this with a grain of salt. But it looks like what happened to my eye is that, everybody thought the president was done with kinetic action. He wasn't going to go back in. The Iranians were, as he says, tapping the Americans along. And he decided, you know what, we can go back in. We can go and bomb a bunch of these sites. And I've heard them described as blinding targets. So you're getting rid of their radars, their ability to see things, their ability to launch missiles. Did it for 2 nights and then threatened Karg Island. And I think the Iranians thought, wow, maybe this isn't what we've been dealing with for the last 45 years and that we need to make a deal or else we're going to sustain damage that we can't recover from. So I do think that military superiority is a fact. We are the ones who are stopping ships in the strait right now. They are threatening ships, but we're shooting down their drones. We're the ones who are actually disabling the tankers. So that's the reality the Iranians face. Hopefully it means they're going to start making some better decisions.
Victoria, with all due respect, I'm looking at what the market reaction was yesterday, and that was not the interpretation of the market. When the initial headlines came out in the Truth Social post from President Trump, the reaction in markets was, we don't believe you. You've talked about a potential escalation before. Why should this be any different? And essentially, if you take a look at what Maris is reporting, the semi-official news agency out of Iran, it's a 16-point deal or 14-point deal that includes some that are still very controversial and similar to what they were a couple of months ago. What gives you confidence that anything was accomplished?
Well, I mean, I don't actually get my news from there. They haven't proven terribly reliable in the past. What they tend to be is a messaging device actually to the Iranian people from the regime. They're trying to signal to the Iranians what they want to have in this deal. And so this is, and to my eye, a lot of wishful thinking out of the Iranian regime. I'm going to wait and see what's actually in the deal before I just make up my mind about it. But obviously, Lisa, we're dealing with the Iranians. They have been obstreperous before. That is that's their brand, if you will. And they're going to try to continue the sort of stalemate we're in as long as we can. But I think the fact that the president has both been willing to do hugely more than any other American president to degrade that regime, to degrade their nuclear program, to demand his red lines, and then was willing this week, when in a situation where there is significant political pressure on him to, wrap this up, get to a deal, any deal, but he hasn't been doing that. He's been sticking to his red lines. So, as I said, I'm going to wait and see what's actually in the deal rather than believe Mayer. And, as for market reaction, I mean, the stock market went up 1,000 points yesterday. That's not a bad thing.
Well, Victoria, what gives you confidence that this time something has changed in the negotiating position from Iran?
Well, it looks to me like they are shifting, that they are realizing that the situation for them is one of diminishing returns. And so, they can demand to have control over the strait going forward. But the fact of the matter is that the rest of the region that they've so completely alienated is busily building infrastructure to make that completely irrelevant. So you have the Saudi Petroline pipeline that we've discussed. We've got UAE building the Fujairah pipeline around the strait, and talk of a natural gas pipeline that Qatar would have access to across the Arabian Peninsula. So the Iranians are in a position where they have fewer and fewer cards, even if they are if they are obstinate at the negotiating table, and eventually, they're just not going to have that much regional leverage.
Thank goodness the Saudis built the East-West pipeline, Bramo. Thank goodness they'd done that. We'd been in a very different position over the last 3 months.
Yeah, and everybody is saying that more pipelines like that will be built, but it's going to take a while, potentially years, especially as they're all trying to do it at the same time and materials are limited.
Victoria, always good to catch up. We'll keep tracking this. We'll get you back on if things change. Things will probably change. The former Deputy National Security Advisor, Victoria Coates there. The latest on energy a little bit later, the Bloomberg Energy Security Executive Briefing with Annmarie. That's where she is. She's on the road now.
Yeah,
and in
I know.
Houston, Texas, I believe.
Yeah, just want to make a quick note. Houston, I believe, is a short jump over to San Antonio.
Are you suggesting she's not there to catch up with the Energy Secretary and Mike Wirth of Chevron?
I think it's a very convenient kind of meeting, and Saturday
That's the pit
night.
stop.
I mean, that's her break to get refreshed before she goes to San Antonio for Saturday night's game.
To watch the basketball.
Exactly.
That's what this is all about. Dow Points. Did we just have Dow Points quoted on the programme a little bit ago? About a few minutes ago, Victoria Coates.
Yeah, I think
quoting
so.
Dow Points.
Yeah,
all right.
that was good.
Get a memo to the Heritage Foundation. We don't do Dow Points over here. All right.
Please, you can go do that.
To the control room. Let's fix that. OK, let's get you an update on stories elsewhere this morning with your Bloomberg brief. Isabel Lee has more. Hey, Isabel.
Hi, John. The SpaceX IPO drawing demand for more than 4 times the available shares. Retail traders placing more than $100 billion in orders for the stock. The company is expected to allocate 20% of the available shares to retail investors, which means most orders won't be filled. And shares of Adobe trading lower in pre-market. The company announcing record second quarter results and announcing its CFO is leaving next week. Adobe's CEO said in March he would be stepping down once his successor has been appointed. And in sports news, the World Cup is officially underway. Mexico winning the first of 104 matches, the co-host defeating South Africa 2-0. The United States is playing its first game against Paraguay at 9 p.m. tonight. That's your Bloomberg Brief. John?
Isabel, thank you for the update. What was that game about, the first game? The officiating of that game?
Well, yeah.
3 red cards?
Red cards, yes.
What are we
instead of
doing
yellow
here?
cards. Although, you can't just go and sock someone. You can't just go, if you don't like them, you can't just go punch them.
I didn't think it was that violent. I didn't. It's like reaching across. And
so you think that's acceptable?
I think it used to be.
Okay, but it's not anymore. Now we have rules.
Yeah, I get that.
Yeah,
We've got video replays.
We've got video replays. Some of them, though, I think were a little bit.
Just be able to leave an elbow in, Bremo.
Yeah, with like brass knuckles. Yeah, you played a different kind of
I certainly did not.
different kind of football.
I certainly did not play like that. Up next on the programme, a big test for capital markets.
It's a momentous transaction. It shows you the capital markets, led by the U.S. capital markets, but the global capital markets are demonstrating a willingness to finance this AI infrastructure build and this build in space.
Up next, we'll catch up with Justice Parmar of Fortuna Investments from New York City this morning. You're watching Bloomberg TV. From New York City. Welcome to the program. Equity futures this morning positive by 0.4% on the Nasdaq, up by a third. I call it the supply monster. We have had so much equity supply, debt supply too, in the last few months. When we caught up with Ed Ludlow earlier on this morning, we were talking about the fact that this is the biggest IPO we've ever seen, almost by a factor of 3, more than 2 times the size of Aramco, and yet it's only the second biggest equity raise we've seen in just the last few weeks.
Alphabet came out earlier and dwarfed this before. It starts to raise a question. We've seen all of these debt raises that have been huge, right? We see Oracle with more than $100 billion of debt that they've raised in the past couple of years. And people just were talking about how that's big debt issuance. But now equity is getting into the game at actually a lesser value point. So how much does this distort valuations in equity markets, or equity markets expanding to include the opportunities in space and beyond?
Accommodating a record-breaking IPO. Under surveillance this morning, a big test for capital markets.
It's a momentous transaction. It presages the beginning of a pretty sizable wave of IPOs. It shows you that the capital markets, led by the U.S. capital markets, but the global capital markets are demonstrating a willingness to finance this AI infrastructure build and this build in space.
Here's the latest this morning. SpaceX, a record IPO testing the Elon premium and igniting debate over the $1.8 trillion valuation. Fortuna investment CEO and SpaceX shareholder Justice Parmar thinks the price is right, writing IPOs priced too high tend to pop briefly and then trade underwater. A valuation that leaves room for the stock to run is far better than one that sets it up to disappoint. Justice joins us now for more. Justice, welcome to the programme. I've talked about the blind spot that I have. A blind spot that I have to imagine what these companies could be. And if this was not 2026 and it was 1997, I'd ask the following question. How is a bookseller priced at 28 times sales? How can this company do anything other than sell books? What will it be? I've got no idea. Are people asking similar questions about this company? And are they the right questions?
Yeah, good morning, John. Great to see you. And I absolutely unequivocally think that those are the right questions, right? Because, the valuation in any kind of conservative approach or pragmatic right now numbers probably don't line up the way that most fundamental and certainly most value investors see things, right? But to your point, you're always able to grow into something if you are a one of one, a very generational type of company. And so keep in mind, I just want to flag two things on what you said there, John. One, you were talking about, the Amazon IPO in the late 90s. So keep in mind, Amazon actually went out at about a $400 million valuation for whatever it's worth. Yes, the metrics were, kind of aggressive, but the value of that company is only around $400 million. You think of that, right? And I only flag that because what the retail and institutional investors were able to do in that situation was they were actually able to ride the stock over 20 years in the public markets. And so I just want to deviate that from what we're seeing this morning with SpaceX coming out at, let's say, $2 trillion. A lot of that growth has actually happened in the private markets versus the public markets, for whatever it's worth.
So that's the question I want to ask about this particular IPO. So here we are at 90 times trading sales, and this time we're raising $75 billion. And in many ways, we're talking about a future that doesn't exist yet by definition, and we don't necessarily have the technology to fulfill it. Why do you have the faith that we will in the not too distant future?
Well, I think if you look at the background of human civilization or American business, we're always doing things that are impossible. What seems very plausible and plausible today wasn't the case 10 or 20 years ago. So we've got great, world-class, one-of-one generational entrepreneurs, folks like Elon Musk, folks like Jeff Bezos, who you mentioned before. And so these people are always going up to the plate to try and do the impossible. And that is, I think, the story, right? There was no reusable rockets before Elon Musk showed up. There's none of, there certainly wasn't the cadence of satellites going into outer space before Elon Musk showed up. And so I think that is the story. And so, obviously the bear case is 90 times sales doesn't make any sense. But the other side of that is if these entrepreneurs can continue to keep innovating, the capital markets can keep funding their dreams, magical stuff really happens. And I think what you probably will see, and again, the not too distant future is a relative term for a lot of different folks. So what I would say is the next 5 to 10 years, I think what's plausible is the company starts to double sales year over year. Let's say they're doing $20 billion this year. I think they can get to 40 next year. I think they can get to 80 the year behind that and start to really get that flywheel moving. And then from that perspective, I think the valuation backwards looking will tend to make a lot more sense.
Justice, magical things are happening in space, and magical things are happening in your bank account, because if you got in early, you are one of the lucky ones that we're all thinking about this morning and being incredibly envious of. What do you do with the new billions that you have? I mean, this is a real question as a stage agnostic investor as you are. Do you keep it in SpaceX, or do you liquidate it and get in early on others that could be the next SpaceX?
Well, I mean, that's a great question, and thanks for kind of flagging that. And so, I mean, what I'll say, and I can only speak for myself, is, we at Fortuna, we're very long-term fundamental shareholders, and we wouldn't have had a chance or opportunity to let the market compound or SpaceX compound if we had just maybe purchased it today. We've owned this SpaceX for many, many, many years. We bought more of the IPO. And so the idea isn't to flip it. I know we're in an age of instant gratification and quick trading and trading strategies and things like that. But the most fundamental rule of investing is letting compounding work for you. And statistically speaking, when you have these great winners, you have to let them run. You really want to let them run and let compounding work itself out. And it's very difficult because there will be pullbacks, there'll be overvaluation, there'll be all sorts of stuff. But generally speaking, when you've got a winner, and I'm talking about world-class companies, I would unequivocally put SpaceX in that bucket. You want to let these things run.
Do you think that Anthropic and OpenAI will have a similar type of welcoming to the public world?
I think it's going to be an interesting, experiment of sorts. I think, look, you guys know this. It's never been done before. What I will say is you want to be out early. I think Elon's done a great job of really pushing his team and his crew to get this stock out early, because you're cleaning a lot of money out of the market. And so as the IPOs continue to stack on, you start to inherently develop risk, because if one of them starts to trade underwater, it's going to have a follow-over effect on the one preceding that one. And then obviously you've got market factors, you've got presidential cycles and geopolitics and things like that. So I think it's too early to say that, we'll have to have that conversation hopefully once they're at bat. But what I can say, all else equal, is being first is being pretty good.
You mentioned you participated, Justice. Did you get the equity that you wanted? Did you ask for more than actually you wanted? What did you get?
I didn't. I mean, look, you never get enough of the things that you want, right? So we didn't get what we wanted. That said, there was there's a couple different banks that were on the file, so we were trying to get it from kind of a few different banks. But I can attest it was very heavily oversubscribed. So we look forward to the trading in the coming hours this morning.
Justice, appreciate your time. Thanks for being here. Thank you, sir. Justice Parmar there of Fortuna Investments on the future and the bet on Elon and this company.
Justice is having a great day today. I mean,
without a doubt.
What do you think he's going to do for dinner tonight?
He looked pretty happy, didn't he?
I think that he
steak in a very expensive bottle.
At least, right? I mean, this is something that people have talked about. All of a sudden, there is an entire rank and file of SpaceX billionaires now coming to the fore, all these people, including a lot of the employees who own shares. And what are they going to do with all of that money? Are they going to take it to Mars with them? Are they going to spend it on mansions? But this actually goes to a point that you and I have talked about a lot, which is inflation. And I'm sorry, this is
We're turning to bonds again.
We have to kind of give a sense. There's a lot of money going into a lot of things, and you just have to wonder how much of that's going to trickle into the real economy.
I think on days like these, it's really easy to sit here and be the skeptical, smug journalist.
Because we're not in it?
I can do it with ease. It's a company that's losing money. The tech doesn't exist yet. We're trading at 90 times plus trailing sales. What are we doing here? It doesn't make any sense. That's the easy thing to do on a morning like this morning. You could have done that repeatedly in the 90s. As you sit here this morning, the harder thing to do is to try and imagine this working out. Imagine it working out in a positive way.
You can already see it. If you really want to be bullish on this, it's not that hard given how many rockets he's already gotten up there and satellites circling. And the promise of actually data centers in space and sort of the solar energy that could potentially power that, I mean, that's pretty ambitious.
You should clip these programs this morning on all these different networks, play them out in 5 to 10 years. We'll see how accurate the truth was, how close we got to that moment.
Whether we're in bunkers.
Yeah, from New York City. You're watching Bloomberg TV.
We're at at the point where the stuff you generally see ahead of market peaks has happened.
The big companies that are already public are going to the capital markets and draining them.
AI policy is probably the biggest market event.
There's a lot of other things going on in this market.
This is going to be a marathon, not a sprint. That's a kind of multi-year phenomenon.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your price action looks like this. Equities up by 0.4% on the S&P 500, up a third on the Nasdaq, off the back of this. As widely expected, widely anticipated, a record-breaking IPO from SpaceX, a $1.8 trillion market cap. We've raised $75 billion.
Yeah, and a lot of people are pointing to what the shadow pricing has for the pop that this will get on the first day of actual trading, which is indicated around 35%. This is interesting for a couple of reasons, most notably because the price was set before this IPO happened. Normally, it's a price discovery process, not this time. So if these shares do pop by 35% in the initial trading, it will indicate just how much demand there is to get a slice of Elon Musk.
From what we've heard so far, tremendous demand in that order book, particularly from retail. We'll spend some time on that in the next hour or so. We've already framed up the two arguments this morning, haven't we? The more skeptical view, it's 90 times trailing sales is unprofitable, the tech doesn't exist. And then just this idea that you should never bet against Elon Musk, because the same arguments made up against this company have been made against Tesla, and Tesla, for a lot of the time, has proven the doubters wrong. The stock price has proven the doubters wrong.
Yeah, and frankly, there's a lot of actual technology behind this that supports that even more than some of the previous arguments, including the fact that he already has rockets that have proven themselves. And that's no small feat, considering how many rockets people have to send up that explode, that have problems before they realize exactly how to do something. The fact that he has a head start on that at a time when the satellites in space are dictating a lot of our connectivity, are dictating our GPS systems, are dictating national security, is a reason why people see the profitability in certain slices of this business, see the diversified business, and are getting to say, look, as someone who grew up on science fiction, it wasn't my own desire, but sort of imposed on the family. I could just say, like, this is actually...
It's not therapy, Bramo.
This is actually kind of incredible. It's coming to... it's like the Daleks coming out. It's like you wonder what Mars will be like.
Yeah, that wasn't what I was thinking. I was thinking about a conversation we're about to have with Ed Ludlow about raising capital.
Please do.
But we can have the sci-fi conversation in the break if you want. When we asked him about how quickly they'd come back, and he almost immediately just said, really quickly. We'll catch up with Ed in a moment. That's what this is about. And I thought of that moment between Jamie Dimon and Elon Musk. And a JP Morgan boss asked Elon, the first question, why do you want to go public? And he just said, to raise capital. To raise capital. It's a capital event. It's about raising capital. And we're going to see more of that in the not too distant future.
It's a race for capital, as many people have said, but when you take a look at the different sections of the business, Starlink has an expected capex for last year of just $4.2 billion. It will probably increase. AI, the XAI and X, had a capex of about $12.7 billion. And you can see the capex for the space aspect had almost $4 billion of capex. You can probably multiply that given their ambitions for growth. Where is that money going to come from?
Do you want to talk about oil? Crude down this morning.
Desperately.
Brent, WTI. Lisa's favourite story. We're getting closer to a deal. Trading in the 80s on Brent this morning.
Yeah, well, the market believes we're closer to a deal. And ultimately, it seems like President Trump really wants to get a deal, which possibly is the key aspect here that markets are welcoming, because they didn't believe him when he said he was going to escalate based on the price action. They do believe that the idea of wanting a destination that's an easier one is a positive. Whether it comes to fruition, when you get into the details, just keep channeling Chris Ferro. The less you know.
The less you know.
The less you know.
87 on Brent, 84 on WTI. Coming up this hour, Stuart Kaiser of Citi as Wall Street gears up for the SpaceX trading debut. Brian Hamilton of Abrigo on why the stock is, in his words, extraordinarily overvalued. And Zach Griffiths of CreditSights on the unprecedented credit landscape for the company. We begin this hour with stocks higher, heading into a record-breaking trading debut for SpaceX. Bloomberg's Ed Ludlow is back with us. Ed, what are you looking for throughout this morning?
Yeah, I still think it's really interesting where the allocations go. We talk about this idea that the retail investors know better than Wall Street does on the story, but like a lot of the decision to make this unprecedented retail allocation was the belief that the retail core will just hold the stock for much longer. So yes, there'll be some crazy trading today when we get kick things off, there is only the float that can be traded. But I think that's going to be very interesting because a lot of these guys, on the institutional side, they kind of already on the cap table. My world's very different, John, like right now than it was, say, even 5 years ago, where we wrote the story of how big the windfall for the venture capitalists will be. But if you look at the private rounds, and this is definitely relevant to the idea of Anthropic and OpenAI following suit, the mutual funds and some of those long-only asset managers are already there in the private markets. So I think it's just so fascinating to see who ends up being holders, when we go to the bar this evening.
A couple of headlines just crossing, just to share them with our audience. So, according to NASDAQ, the IPO of SpaceX will be released for quotation at 9:50 Eastern Time, eligible for trading at 10 a.m. Eastern Time. Ed, just give us the time frame here, the play-by-play over the next several hours.
Yeah, I mean, basically those institutional investors and the retail investors will be waking up to find out their allocations right now and in the coming hours. That 10 a.m. Eastern Time, you get an indication, more solid than the grey or shadow markets would give you on opening price. When is trading going to start? Can't say for certain, but 1 p.m. Eastern is possible, 2 p.m. Eastern. And what's so interesting is that leaves you 3 hours left in the trading day on Friday for the biggest IPO in history. It'd be very interesting to see literally what happens minute by minute, because for lots of people, it's their first opportunity to get in if they didn't get an allocation. You know what I mean? So you buy very high and then sell even higher or sell lower. That's the fun of the markets, right?
Looking forward to it. Ed, thank you. Looking forward to your coverage, buddy, as always. Here's the view on Wall Street this morning. Stuart Kaiser of Citi writing, there hasn't been much market breadth lately on both sell-offs and rallies. The market has been mixed as people rotate instead of broad changes in risk. Stuart joins us now for more. Stu, good morning.
Hey, good morning. How are you?
I know you can't talk much about this IPO specifically, but the amount of IPOs that are coming to the market at the moment, do you see them as a red flag for the bull market or a green flag to deploy more capital?
I mean, ultimately, we'll have to see how they perform. And I think it's not just IPOs, right? You have secondary offerings from Meta, from Google, from Amazon. You have tremendous amount of convertible bond issuance, IG bond issuance. So this is a sort of broad-based demand for capital. And I think a lot of investors are looking at this as one of the largest construction and industrial production cycles the world has ever seen, right? And that needs to be financed. And what we're seeing, I think, the last couple of weeks is a little bit of a friction in the market as people digest just the enormous amount of capital that's going to need to be raised to get this done.
Pockets of pushback, Stu, that we've talked about, Meta, Oracle, maybe spending too much, thinking about raising more capital, stock markets pushback. Are all companies going to be treated the same, or are we just isolating the weak points?
I don't think all companies will be treated the same. The winners the winners and the big free cash flow companies like we see from the Mag 7 the last couple of years are going to be able to raise that capital, and companies that are maybe the tier 2 or the tier below that are going to see credit spreads rise and going to see some more pressure. I think what's gotten people's attention recently is last year was all about debt financing, right? This year it's been about equity financing. So that's gotten equity investors' attention. Like, wait, this applies to us as well? This doesn't seem very fair. And much like Lisa, I was forced to watch Star Trek against my will. So, I have some scar tissue that I'm working through as well related to this.
We can talk about that later. This is actually something I think a lot of people on Wall Street probably are working through this morning. There is a sense, though, and you talked about this, John was talking about the rotating pool of capital and how it's going from different names and different pockets, and the breadth has been really bad. Mm-hmm. How much are people selling some of the previous winners to get in on the new hot and shiny thing?
It's a tough situation right now because the winners is still where people want to be. And this year has been really defined by estimate revisions, earnings going higher, and that's driving stock returns. And frankly, that's been in a relatively narrow part of the market. So as much as people might want to rotate, when you say, OK, when you rotate, you have to sell this guy and buy that guy, the guy they have to buy is not something they want to own, right? So in some sense, it's like you're being forced to rotate against your will a little bit, and it's been a little bit tricky. So I think, look, some of the stuff is up so much. If you look at NASDAQ earnings are up 10% since the end of March. Semiconductors earnings have been revised up 17% since the end of March. So you kind of fade that at your own risk, right? Is that done? And I think a lot of investors do not think those revisions are done. They still want access to those positive earnings revisions. So I think people are playing a little bit of hopscotch amongst the AI winners. Oh, this looks a little overdone. Let me move here. But it's not, I want to move down, the quality spectrum or be really too far away from that AI trade.
Something you mentioned, that the debt markets have gotten used to being tapped again and again to build out the Industrial Revolution, and they certainly have been over the past 2 years. Now it's equity markets' turn. At the same time, is this being driven by the fact that equities look like a better risk-reward proposition at a time of earnings growth like the kind we've seen, given that inflation is going to be higher, that, yes, bond yields are higher than they have been historically, but in some ways aren't necessarily even going to keep pace with inflation over the next couple of years.
And you also have the situation where the credit markets are going to start to look a lot more like the equity markets, right? Because large cap tech and the Mag 7 are issuing debt. All that debt's going to go into the credit indices. So this sort of sector concentration you have within equity actually is going to exist within credit. So you're not getting all the upside reward, but you're actually getting a lot of the risk and the concentration. So, we'll see ultimately how that plays out. I mean, I'm an equity guy. I'm going to tell you, equity's not much.
But is the usually bond allocated money going into the equity space because of exactly this dynamic?
I mean, money's been coming into the equity space, kind of from all directions. The beauty of the bond market, though, is you're constantly recycling coupon payments and stuff like that. I mean, the bond market's healthy. Look where credit spreads are. There's not like an issue on the credit side. But to your point, you're making a decision there of, do you want your fixed payout or do you want access to that sort of upside earnings revision? And the revisions have been just like goofy powerful this year. So it's kind of hard to step away from that, I think, for most people.
So you're describing the changing characteristics of the U.S. credit market. Can we talk about the changing characteristics of the index, the NASDAQ? What that's going to look like as we introduce some loss-making companies with massive market caps, and we do so really quickly. How's the character of the NASDAQ going to change?
Well, I think what's interesting is the size of some of these IPOs is just so big historically because they IPO'd late, I guess would be a way to look at that.
Yeah.
And the other interesting thing with the indices is a lot of these things are going to be in NASDAQ pretty quick and not in the S&P for a while. So you kind of get a little bit of a divergence, between how the two things look. For NASDAQ specifically, we'll have to see how it all plays out. But it's not unusual to have sort of higher volatility, stocks with a lot of earnings.
Follow-up question. Does that just amplify the existing difference that already exists between the two indexes?
Look, the concentration in S&P has gotten pretty high as well. But yes, it will. I mean, you could be in a situation later this year where there are 2 or 3, new IPOs that people really want access to that are in one index or not, and not the other. And you will get a divergence there. Yeah, it will. I mean, just by definition, I think it'll kind of widen out the gap between the two.
Do you buy the argument that with increased supply, the dynamics of the equity market are changing enough to dilute some of the demand, that just the technicals alone should take away some of the heat that's been underpinning the equity markets?
You mean just like too much supply, not enough demand? That's what we've seen, I think, the last couple of weeks, right, is people are, looking at it a little more critically in terms of how much equity supply am I going to need to absorb over the next 6 to 9 months, and what does that mean for performance? From my perspective, I'm a good news guy, and if those earnings numbers are getting revised up in the way they are, there's only so long you can keep yourself away from that, right? I mean, you revised up NASDAQ earnings 1% in the last week. I mean, that's just like a stunning, rate of change. So, yes, perhaps, where there's a little bit of indigestion going on right now, and it's almost prospective indigestion because people are looking at the next 6 to 9 months and what is the total amount that gets issued. If you're jamming earnings as high as they are, there's only so long you can ignore it, in my opinion.
Let's ask it another way and down the technicals. You've had buybacks like up here, sky high, really reducing the amount of float, the amount of stock that's available for people to buy, the shrinkage that everybody's been talking about. As the spread starts to close, and I know it's still wide, but as it starts to close, does that dynamic matter? That's really what Lisa's asking.
Yeah, I mean, it can matter. I mean, there was some discussion that some of this CapEx spending was going to eat into buybacks and stuff like that, and now you're actually getting equity issuance. So to your point, you're kind of going other way. What's interesting, too, is a lot of these companies started issuing dividends less than 18 months ago and are now kind of committed to that. So, yeah, look, there is a little bit of a supply-demand dynamic, going on. But to your point, this has been a multi-decade issue of shrinking number of publicly traded companies, et cetera. So it's not something you're going to fix or reverse in 6 months, right? It would take longer than that, I think.
I remember the bull case being a scarcity of assets. Remember that?
I do.
Particularly coming out of the pandemic, and I think people are doing their best to change that.
Yeah, well, I wonder if we still have a scarcity of bonds. I remember Bob Michael talking about a scarcity of bonds, and I wonder if we have a scarcity of bonds and a scarcity of equity, or if we've maybe tipped the scales a little.
Based on the amount of demand, maybe not yet.
Yeah.
Right.
Take a look at the cash and money markets. $8 trillion. Pretty wild.
Stuart, it's good to see you.
Yeah, good to see you.
Thank you, sir. Thank you very much. Stuart Kaiser there of Citi. Let's give an update on stories elsewhere this morning with your Bloomberg brief. Isabel Lee has more. Hey, Isabel.
Hi, John. It's officially the biggest initial public offering of all time. SpaceX raising $75 billion in its IPO, pricing more than 555 million shares at $135 each. The Nasdaq announcing moments ago SpaceX will be eligible for trading at 10 a.m. Eastern. And the ECB may raise rates for a second straight month in July. Governing Council member Joaquim Nagel saying that the fallout from the war is proving too strong to ignore. and high energy costs are affecting inflation. The ECB meets again on July 23. And oil extending its slide on optimism over a U.S.-Iran peace deal. The draft deal included a possible reopening of the Strait of Hormuz within 30 days. Coming up later today at the Bloomberg Energy Security Executive Briefing in Houston, Annmarie will be speaking with Energy Secretary Chris Wright and Chevron CEO Mike Wirth. That's your Bloomberg Brief. John?
Isabel, thank you. And if you watch TV on Saturday evening and look really carefully at the crowd, you might spot Annmarie somewhere.
I think she was looking for tickets here. San Antonio.
We need the mug bag just to sit there, right?
I mean, in lieu of her, but as she goes to Houston for work.
The mug there for the bump outs.
Yeah, exactly.
We'll make it work. Up next on the program, justifying a sky-high valuation.
About half the valuation of SpaceX today comes actually from combining artificial intelligence and space, because space today is a lot of cash flow.
In just a moment, we'll catch up with Brian Hamilton of Abrigo, live from New York City this morning. Good morning. You've heard the numbers 10 times over already this morning, maybe in just the last 30 minutes or so, raising $75 billion, a $1.8 trillion market cap, instantly a top 10 public company on the planet. Crazy numbers.
Well, we're talking about something beyond the planet, and the addressable market is potentially infinitive, especially as people look increasingly to space for very practical things, not only satellite connectivity, but also for data centers. And people might smile and say, well, that is pie in the sky. At the same time, a lot of people are saying we're that much closer to reality. And frankly, Elon Musk has done this before.
Futures positive this morning, higher by 0.4% on the S&P, on the Nasdaq higher by 0.44. Under surveillance this morning, justifying a sky-high valuation.
About half the valuation of SpaceX today comes actually from combining artificial intelligence and space, because space today is a lot of cash flow. And if you have access to your own cash flow in AI, you can buy your own infrastructure. That makes it much cheaper for you. You don't have to pay a margin to a cloud provider.
So here's the latest this morning. SpaceX boss Elon Musk is on the verge of becoming the world's first trillionaire, with Musk's retail trading fan base placing more than $100 billion in stock orders. Brian Hamilton, chair of software firm LiveSwitch, writing, people want to get wealthy with Elon Musk. SpaceX may be an extraordinary company, but it's also an extraordinarily overvalued stock. Brian joins us now for more. Brian, welcome to the program, sir. 90 times plus trading sales. Clearly, that is a massive number. People are willing to pay up for growth. But I haven't heard people really talk about the growth of this company, Brian. Can you put some numbers on it? What is the growth of this company?
Well, first of all, we should go to Pluto, not Mars. This valuation, for perspective, if we build a company, I've been an entrepreneur my whole life. You know, you work hard, get customers, get profitable, hopefully. A lot of them don't. But basically, if you go out now, there's an average multiple of sales to price of about 10. So if you make, for every buck that you generate in sales, you get about $10 in valuation. These guys at SpaceX are at 99, the highest I've ever seen. A 2,000% premium for Elon Musk. Just unbelievable. So people need to know going in. And guys, look, I'm mostly concerned with the retail people. The professional people, they can do what they want. They're usually, you know, leveraged the right way. They have balanced portfolios. But the average retail investor is massively overpaying it. Your last guest, I get a kick out of that because remember, their business model is also all over the board as well. They're doing a lot of different things. And it's not just a matter of having satellites out there. They're all over the board. So, you know, they're totally overvalued. And it's so obvious. I mean, way out. I've never seen anything like it.
What do you think will be the reality check that people will need to see before it is appropriately valued in markets?
That's a hard question. I don't know with Elon Musk. I mean, generally, as you guys know, he gets a premium because he's done some great things. And I don't want to take that away from him. And as an entrepreneur, I love that he invested in his own companies. But this premium is crazy. So for perspective, when a small company called Tesla went out public, they were about 20 times sales. This company is going to be about 100 times sales. Very, very high valuation. By the way, small footnote, they lost $5 billion last year. Look at companies out there now, NVIDIA, Microsoft, about a $3 trillion valuation. As soon as these guys go out, IPOs are supposed to be initial. It's supposed to be initially what you're worth. They're going out, as you guys mentioned in your break, as one of the top 10 largest companies in the world right off the get-go, as really a small company right now. So one thing, if you're a retail investor, look at the numbers. Interesting dude. By the way, I don't know why he's going to Mars. I've driven out to Wyoming and South Dakota. There's a lot of land out there. There's plenty of room. But on a serious note, it's unbelievably overvalued. My concern is the retail guy.
Well, my question to you, Brian, is SpaceX alone, or are OpenAI and Anthropic proposing similar sort of stratospheric valuations at a time when people are banking on a myth?
Yep, true. Great point. However, look at their multiples. They're going to be at about 30 times revenue, not 99 times revenue. And remember, SpaceX is not a direct competitor to those other companies. It's not. They've got Grok. That's a very small part of their revenue. So this is a really nice thing you got up here. But this is for all IPOs. These are businesses in different industries. And by the way, SpaceX only grew about 40% last year. They're not doubling and doubling and doubling. So I've been doing this, guys, for 20 years. I've been an entrepreneur. I ran a financial company. They're totally overvalued. Now, will it just keep going up because of the Elon factor? Who knows? But if you buy, you're buying high, period.
I think, Brian, that's the point. Didn't we say the same things about Tesla? What did we learn from that experience?
Yeah, what we learned is that he can defy gravity. He should be going out in space, you know. But remember, Tesla, again, their relative value was much lower when they went out public. Here's my beef. When you go out public, and I've been on both sides, I've been in finance, I've been an entrepreneur my whole life. When you go out, this is my problem. They're getting all their value at the IPO level. What we want a company to do is to prove something. And Tesla did. But Tesla's relative value was much lower at IPO.
Brian, it's good to see you, sir. We appreciate the skeptical view this morning. Thank you. Brian Hamilton of LiveSwitch with some pushback this morning to the valuation of this company at 90 times plus trading sales.
Based on the valuation alone and based on what he was talking about, he makes a really valid point. And a lot of people are saying, essentially, yes, we are buying into the myth of Elon Musk, and we want to do that because we have seen what he's been able to do in the past. You just have to wonder how much these high valuations can remain longer than some of the skeptics can remain skeptical. And ultimately, you know, it isn't about numbers, because how do you predict numbers that are increasing at the pace that they've seen? I mean, how many analysts have we seen upgrade their forecasts for tech companies that have come out with earnings?
Yeah.
They haven't been able to keep up. In a technological revolution, how do you value something? And ultimately, a lot of people are saying you can't. You have to just sort of close your eyes and buy. And that makes a lot of people deeply uncomfortable who have been through financial cycles. Nonetheless, you made a good point about Amazon.
This is not a normal IPO. At all. This company is more than 20 years old. I mentioned Amazon earlier. Let's think about the Amazon IPO. They were raising 400 to 500, something like that, 400 to 500 million dollars. We were talking about those kind of numbers at the time. 28 times trading sales. Sounds super expensive, right? Compared to this, we're talking about $75 billion, right? The market cap of this company, $1.8 trillion. We're dwarfing anything we were talking about in the late 90s. Dwarfing it with massive, massive numbers.
And in the late 90s, we were talking about the more even distribution of goods and services, the more effective kind of marketplace pricing dynamic. Here we're talking about whatever is out there. I mean, you talk about some of the discussions around sci-fi. It's essentially building into that and saying, you know, we're going to go to Mars.
I think to Brian's point, so much value has already been created in private markets.
But that's
we're coming to this so late.
But that's with everybody. I mean, that's the thing.
Yeah.
It's sort of a change in the dynamic of markets.
It's changed a lot. Coming up, Gregory Allen of Decision Tree Research on the first market test for SpaceX. We are making financial market history in real time. Just look at the numbers. $75 billion, market cap $1.8 trillion. Lisa and I were talking about Amazon. I mentioned the number 400 to 500 million. That was the market cap back in the IPO of 97. They raised a tenth of that. The numbers are just nowhere near comparable to the numbers we're talking about with this IPO.
Yeah, although our previous guest, and you picked up on this, was making a really good point, which is the structure of the market has fundamentally shifted, where more of the value is created in private markets before these companies go public. So it's hard to compare the moment we're in today to the late 1990s when it comes to either the technology or when it comes to exactly how capital is being raised.
Like we've said repeatedly through this morning so far in the last 90 minutes, easy to sit here and be super skeptical and say, how is this trading at 90 plus trading earnings? That seems absolutely crazy. That's not the bet with this IPO. The bet's the forward look. The bet is that the revenue number is going to change dramatically in the forward years. Now, that's the debate we've got to have. How quickly can the revenue story change without the technology necessary to achieve the kind of dreams, the hopes that are priced into that market cap?
The idea that people are looking for dreams right now gives you a sense of the dynamic in equity markets. And not to sound overly philosophical, but people want to see and have been had their belief suspended in terms of what's possible just based on the pace of earnings growth that we've seen, which has been absolutely bonkers so far this year. When you see what's being delivered at places like Google, at places like Amazon's AWS, people start thinking, wait a second, there is an entire world of new technology that can be capitalized on. Elon Musk would have a near monopoly on the space marketplace, which already has been really fruitful when it comes to connectivity and already has been really fruitful when it comes to national defense. So you put all of these things together and people are willing to give a lot of assumptions and give a lot of credibility to what he's putting out there.
You've got to understand how you're wired. I know how I'm wired. I know how you're wired. You're a bond person. I'm a bond person. You look at the numbers. Am I going to get paid? How much risk is here? I'm not a dreamer. I don't have the imagination to really think through what this could be. I know we've said this repeatedly. I've said it again this morning. I would have totally failed at imagining what Amazon would have been in the next 25, 30 years after the IPO in 97. I would have said exactly the same thing I said this morning. How is a bookseller worth 28 times trading sales? They just sell books. How big can this company be?
The difference this time around, as somebody who is wired to be a bond person, is that the bond market concerns me, and particularly the sovereign bond market at a time where there is so much investment going into an economy that is not used to actually investing in the physical world. And suddenly the physical assets are becoming bid up. And you have to imagine it's going to be a stickier inflation moment with greater growth. And in that moment, bonds don't look so great. So maybe this is not a moment where bonds can really offer that offset to the risk that you're taking with taking a chance. And I'm not making a call here, but that's kind of...
Sounds like a call, right?
But it's not. I don't know the answer to this. I don't think anybody does, but that is how the calculation has changed.
Your point on spending and experience, I think is really important and very valid. That the hundreds of billions of dollars that are being raised in capital markets right now are being spent by companies that don't have much experience of spending that kind of money on physical things. I'm thinking of hyperscalers and those kind of things. This is very new to them too.
Which is also why you see them partnering with a lot of private equity firms and a lot of the big private asset managers. But essentially, they're becoming the world's biggest portfolio managers. And you have to imagine that some of the people in those seats don't have a lot of experience in that space.
Chip players are becoming hedge funds with all the investments we're seeing at certain names.
I mean,
right?
yes. And the idea that Bitcoin traders are becoming energy providers for hyperscalers. I mean, the world is in flux.
Massive changes. Huge changes. Equity futures right now in the S&P up by a fifth, or call it 0.5%. On the Nasdaq 100 up by 0.5 also. On the Russell up nicely by 0.7. That's the price action this morning. On our radar, our top story, SpaceX drawing more than $100 billion in orders from retail investors, a sharp rise from the previous figure of 70. The company expected to allocate 20% of available shares to retail demand. Elsewhere, top AI leaders are slated to attend the upcoming G7 summit in France. Executives from OpenAI, Anthropic and Google will all be gathering in a rare joint appearance. And finally, Iran confirming talks are underway for a final peace deal with the US, state media claiming provisions include reopening the Strait of Hormuz within 30 days and affirming Tehran's commitment to not develop nuclear weapons in return for lifting sanctions.
Yeah, and coming out and saying that the framework text is nearly finalized. There's a lot of daylight, though, between what are the state-linked media outlets are putting out there and what the U.S. is demanding. And there still are a lot of sticking points in there. The key point for markets is get the Strait of Hormuz open, whatever form it's going to be, get oil moving once more, and then we can move on and you guys can hammer out the details. Hammering out the details is going to be difficult, and how many concessions are going to be made to get to the place where the Strait of Hormuz truly is operating even close to the way it was before this.
The headlines are always confusing. Some of it's for domestic consumption, to tell your people that this is what we're really trying to achieve, even though you're probably falling short of that. Some of the headlines are active negotiations in real time because we're not quite there yet. think the market's decided we were getting closer a long time ago and is comfortable with the state of play?
To me, it's a huge tell that President Trump came out and said, oh, now we have a deal after threatening an escalation. The market didn't believe it, and the market was right. And essentially what we have seen is that this president, under a lot of political duress, with the midterms coming up, with oil prices already kind of eating into the budgets of so many different families, does not want to see this continue. The market is understanding that story. And so they're seeing the path of travel that can get us there, and they're not even focusing that much on the details right now.
Crude in the 80s, Brent 87 this morning, WTI around 84. The main event is on the Nasdaq a little bit later. The SpaceX trading debut following a record $75 billion IPO. Yahara on the floor, and she joins us now for more. Yahara, walk us through the play-by-play for the next few hours, how this one's going to play out.
Exactly, John. So it is relatively calm here at the Nasdaq. We just got our first headline from here that SpaceX will be eligible for trading at 10 a.m. Eastern. And at that time, this area will become the center of attention for investors, bankers, and traders watching what will be the biggest IPO Wall Street has ever seen. And what's striking about this IPO is that for years, Elon Musk argued SpaceX didn't need public markets, that the company had access to private capital and could fund its ambitions without the scrutiny that comes with being public. But SpaceX is entering a very different phase here. What was once a rockets and satellite story is increasingly becoming an AI infrastructure play. So, it has lofty goals, data centers in space, supplying AI computing power, already striking deals with the likes of Google and Anthropic. And what Elon Musk says is that will require dramatically more capital. So that is what's changed. SpaceX is now a fundamentally different company, and they are taking advantage of a moment when there is voracious appetite for AI in the market. So it will have huge repercussions for the broader market, and that's something we'll be seeing play out here today.
Yahara, looking forward to your coverage throughout this morning. Yahara Anand on the floor over at the Nasdaq. Today's trading for SpaceX offering a critical test for a near $2 trillion valuation. Gregory Allen of Decision Tree Research writing this is not a rocket IPO. It's a venture capital style bet at index fund scale. Gregory joins us now for more. Gregory, welcome to the program. Let's get into it. Do you see the growth that justifies the hype?
Simply put, no. I think SpaceX is a collection of multiple businesses. You have the Starlink communications business, which is very profitable and growing very rapidly. You have the new AI infrastructure bet, in which SpaceX is actually selling to one of their competitors, Anthropic, which develops a competing model against Grok. And that's a run rate of $1.25 billion per month. A pretty nice business. The thing is, it reveals the fact that SpaceX is actually building AI infrastructure faster than their own AI models can actually consume it, and their AI models are falling out of the leaderboard. We'll have to see what the performance of Grok 5 looks like when it actually comes out. But if you look at that total addressable market that SpaceX is overwhelmingly hyping, it really rests upon the ability of, number one, SpaceX to develop not a temporary advantage in AI infrastructure, but an enduring advantage based on superior access to orbital infrastructure, and all of that feeding superior AI models. Both of those things are possible, but they're by no means guaranteed, and this valuation basically takes them as guaranteed.
Gregory, you went through the details of the company: launch services, Starlink, reusable starships, internet services. The hopes and dreams seem to be around the orbital compute, the data centers that we don't yet have in space. Gregory, do we have the technology, and how close are we to achieving that technological development that can deliver something that looks like that?
So there's a difference between what is possible in prototypes and testing, and SpaceX is validating GPUs in orbit. SpaceX is going to have some prototype satellites in orbit probably in 2028, looking into this sort of thing. But that's very different from thousands or tens of thousands of satellites being ready to go and being a better bet than what exists on the ground. The types of cooling infrastructure that you need for these data centers, NVIDIA GPUs, they routinely catch on fire. That's why cooling is such a huge part of the electricity bill of these hundreds of megawatts and gigawatt scale data centers. When you're out in space, there's no air and there's no water to cool, so you have to do it all by radiative cooling, which is in principle possible, but in practice extremely tricky from an engineering perspective. The other thing is these GPUs fail consistently, and once those satellites are in orbit, you're not going to repair them. You're not going to go up there and try and fix them the way you do when it's on the ground. When GPUs break, you swap them out with ones that work. So the issue here is this is in principle possible, but it's not technologically mature and it's not industrial scale mature. I think a helpful analogy here is Elon Musk's earlier idea of the Hyperloop, a rapid transit vacuum tube-based transition mechanism on maglev rails. That was in principle possible. It doesn't break the laws of physics when Elon Musk put it out in a white paper. But nobody's pension plan lost any money on Hyperloop. And SpaceX orbital AI infrastructure is going to go into people's index funds. It is a venture capital style bet that's being treated as index fund mature and certain.
One thing that you pointed out, Gregory, is how intertwined some of these companies are that are coming to market in the next couple of months as well. Anthropic being the biggest customer of SpaceX when it comes to XAI, the artificial intelligence aspect of it. How concerned are you about some of the circular financing that you're seeing under the hood? How closely connected all of these bets truly are?
So I think the circular financing is not an especially large risk here in the case of SpaceX. It's not like their valuation is being massively propped up by, for example, NVIDIA as a key supplier of GPUs, for example, which is some of the concern about companies like Anthropic or OpenAI. And the Anthropic deal is not so much interesting as a circular financing story as a who overbuilt and underbuilt AI computing infrastructure relative to how much people want to use their AI models. SpaceX and XAI, its subsidiary, has demonstrated that it is very fast at building ground infrastructure for AI computation. They're legitimately world class at that. Anthropic is renting from them because Anthropic models are superior, and so people want to use them compared to Grok. And so this is a case of where the company with the better model needs more infrastructure, the company with the worse model needs less infrastructure. But keep in mind, even though this is a 5-year deal, either company can cancel the agreement with 90 days notice. So if Grok 5 is amazing, you can imagine a scenario in which they say, actually, Anthropic, we want to keep that infrastructure for ourselves. And by the same token, Anthropic underbuilt for the year 2026, but that's why they're going public, because they want to start getting into the massive construction business too. So how much of this is an enduring, available partnership versus a marriage of convenience at the current moment?
Gregory, what would you have to see that would change your mind and make you think this valuation was justified?
Well, as I said, this is based on a lot of plans coming true. And I said specifically that they're coming true being almost a certainty. What do I mean by that? You mentioned that a lot of your experience is in the bond market. If you were to take SpaceX's valuation of $1.75 trillion and convert it into an annuity bond at the current risk-free treasury rate of 4.5%, that is the equivalent of an annuity that pays out $80 billion a year guaranteed forever. SpaceX, by contrast, lost $5 billion last year and is talking about having to write checks in the hundreds of billions or potentially trillions of dollars in future down payments on capital expenditures before a lot of these dreams come true. So again, this is being valued as the equivalent of certainty, $80 billion a year guaranteed in profit forever. And that's just not what this looks like right now. Now, there are going to be some near-term technical milestones that will tell us what this looks like. Elon Musk's plans for orbital AI infrastructure involve Starship launches going up by more than 100x per year. So where those Starship launches previously were about getting to Mars, now it really is about validating the possibility of building this orbital AI infrastructure.
Gregory, appreciate your time. As always, Gregory Annam there of Decision Tree Research. A range of views already this morning. And at the very start of the program, we said it would be dominated by two particular views. One, don't bet against this guy, Elon Musk, hopes and dreams, all that stuff. He's been successful with Tesla, he's proven that. And the other one was exactly this, 90 times plus trading estimates, trading sales rather, and a very skeptical view of a company that's losing money and a promise of technology that doesn't exist yet and might not in the not too distant future.
Objectively, a lot of people have pointed to a lot of the scenarios that Elon Musk has painted and said that he is pricing in the absolute best case scenario, kind of like what we were just hearing from Gregory. A lot of people are saying, yes, but he's actually fulfilled that when it comes to Tesla. And there are so many different levers that he could pull to get there that could potentially be huge gainers. So ultimately, this is a story of faith, and finance does not do well with faith in many different pockets.
Certainly not here to advocate for one view versus the other.
No.
It's up to you at home, and that's how you allocate capital in this equity market right now.
I don't have a
That's
sense.
A total judgment call for you.
Do you have a sense of which it is? I have absolutely no idea.
No
Genuinely.
idea. I'm sort of happy that I'm sitting on the sidelines, just sort of, navigating the current conversation.
I have to say I'm not, because I see people who actually were in on it initially, and they look very happy.
No, I'm
they
jealous
look a lot
of that.
happy.
Of course I'm jealous of that.
Yeah, exactly.
All the upside.
Yeah, I'm not so happy on the
Without a
sidelines.
doubt, being a journalist can't do that,
Nope.
unfortunately. Equity futures right now in the S&P up by 0.6%. With an update on stories worldwide with your Bloomberg brief, Isabel Lee has more. Hey, Isabel.
Hi, John. We have the U.S. and Iran maybe nearing a deal to end the war and open the Strait of Hormuz. President Donald Trump saying a deal is imminent and could be signed in the next few days. An Iranian Foreign Ministry spokeswoman saying, quote, we have not yet reached conclusion on this matter. President Donald Trump tapping former SEC Chief Jay Clayton as the next Director of National Intelligence. The announcement follows backlash over his selection of housing regulator Bill Pulte to serve in the role on an acting basis. And in sports, the Carolina Hurricanes are one win away from the first Stanley Cup in 20 years. The Canes beating the Golden Knights 4-2 in Game 5. They look to close things out in Vegas on Sunday night. That's your Bloomberg brief. John?
Thank you, Isabel. I'm going to sound like a total foreigner. Forgive me. I know I've lived here a decade plus, but ice hockey in the summer, I just can't get my head around.
I mean,
just doesn't make sense.
Hopes and dreams, John. You can play hockey even if you're in Florida. Miami, let's go.
Vegas.
June, Vegas.
Yes, right.
I mean, yeah,
In the
why
summer.
not? In the summer.
Yeah,
It's a big
apparently.
place.
Up next on the program, shooting for the stars.
SpaceX is the biggest rising star of all time. When you think about a market cap of $1.77 trillion, in fact, with all the cash that they have, which will be in excess of $80 billion of cash, they have no net debt. It's clearly an IG-rated company.
Up next, we'll catch up with Zach Griffiths of CreditSights. Stocks positive going into the opening bell. A few hours away, we're up by 0.6% on the S&P, on the Nasdaq up by 0.6 also, and heading towards another week of gains. Under surveillance this morning, shooting for the stars.
SpaceX is the biggest rising star of all time. When you think about a market cap of $1.77 trillion and only $20 billion of debt, that's only 1% of the entire enterprise value is in debt. In fact, with all the cash that they have, which will be in excess of $80 billion of cash, they have no net debt. It's clearly an IG-rated company.
So here's the latest this morning. Some on Wall Street expecting SpaceX to tap the debt market shortly after a record-breaking IPO. Sources telling us here at Bloomberg the company has lined up investment-grade ratings from 3 major bond graders. Zach Griffiths of CreditSights writing, I don't think there's any precedent to draw for a company like SpaceX to understand what their rating should be. Zach joins us now for more. Zach, welcome. You heard the words of our previous guest. It's clearly an IG-rated company. Do you see it differently?
No, we don't. And in terms of what drives that IG rating, John, you have the new or relatively recent Google and Anthropic deals. Those aren't captured in the LTM metrics. And when you think about the loan to value consideration that I think you were just highlighting from Bruce Richards there, it's 1 to 2% of the overall enterprise value. And so there's obviously a ton of equity valuation ahead of that credit. And so while that's not something that the ratings agencies tend to look at, we do think it plays a factor here. And so we are expecting an IG rating on SpaceX when they come to the market, and we think that'll be relatively quickly after the IPO today.
It's incredibly difficult to value a company like this. We've heard a lot of different opinions so far this morning and to evaluate whether it's investment grade or high yield. But does the bulk of equity being raised give you as a bond analyst comfort that the equity markets are sharing in some of this and are actually sharing the first loss piece, and give you confidence that they can raise more debt at a better value?
Yeah, a lot of comfort, Lisa, when you think about what we were just going through. And if you think about the metrics from a last 12 months EBITDA perspective, looking at around 5 times leverage. And so that's more historically consistent with a high yield rating. Again, that doesn't capture some of the recent deals. And of course, having all of that equity ahead of the credit makes us very comfortable with that IG rating. And when you think about how much debt they're likely to come to market with in the near term, call it around 20 billion. That kind of pales in comparison in terms of what the market has been digesting with ease so far this year, with the big 5 hyperscalers coming with almost 175 billion split across US dollar and various other currencies. So we do think there is going to be demand for that debt out there without much of an issue, even after this huge equity raise.
That said, Zach, how much does it concern you, the just absolute consolidation of all risk in one bet right now, whether it's on the debt side or on the equity side?
Yeah, I think concentration risk is a fair concern to have. And I think the circular financing consideration that you were just discussing with the prior guest is something we're concerned about. When we think about where the rubber meets the road from that perspective and where there might really be risk in terms of some of these big players coming to market with IPOs, OpenAI seems to be the one that really needs the funding. And so if for some reason markets become less risk taking over the next couple of months when Anthropic and OpenAI need to come to market, that's a time frame that we think there could be a little bit more consternation. For now, we're certainly comfortable with the environment we're in. And when we talk to our clients from a fixed income perspective, they're very happy with all-in yield levels despite tight credit spreads really across the credit markets.
So just finish up on SpaceX. So I understand they've got this massive ability right now to tap into the equity market and raise equity capital quite easily, and we've seen that. But how much that should be a factor in your credit rating when the company is losing money, and they're going to spend that money really quickly too? You mentioned some of the hyperscalers and debt issuance elsewhere. Let's take Alphabet. Alphabet made profit more than $100 billion last year, Zach. This company loses money. Why should that company have an IG rating?
Well, again, it comes down to companies rating, or the ratings companies rating through the cycle. And when you think about some of the deals recently inked, that certainly improves the position, and the net cash position after the IPO certainly looks very attractive. Now we're expecting cash burn to be around 20 to 30 billion per year as they lean in to that AI infrastructure business. And so there's a lot of metrics to consider, John, but we do think with the recent deals and projecting forward through the cycle and considering some of the upside scenario, that an IG rating will be justified, and that's kind of what we're hearing out there as well.
Interesting, Zach. Appreciate it, sir. As always, Zach Griffiths there of CreditSights. The race for capital, and they're clearly going to tap that debt market pretty quickly based on what we've heard so far this morning.
It's a structured investment, and if the equity piece is big enough and that tranche has the first loss, then essentially if you're taking off the top, then potentially you could have a AAA, just like some other structured vehicles.
Yeah. You sound skeptical.
It's essentially the argument for the top tier rating without understanding how to analyze the actual valuation.
Again, you sound skeptical. Coming up, Sarah Hunt of Alpine Saxon Woods, Nick Owens of Morningstar, Matt Kennedy of Renaissance Capital, Dan Niles of Niles Investment Management.
It's a test for the market in terms of not just SpaceX, but the ripple effect across the rest of tech. Everybody's investing in it. They've really hyped it.
The majority of the opportunity here, as laid out by the company, is really in the AI compute space.
Portfolio managers are now struggling on how to allocate these new offerings.
Just because something is a very hot IPO doesn't mean that in the 1 or 3 months that the returns are always as incredible as the trading on the first day.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your price action of scores look like this. Here's the bounce, up by 0.6% on the S&P. Enthusiasm this morning for a deal between Iran and the US, taking crude lower, pushing equities higher. On the Nasdaq, up by 0.5%. Enthusiasm for a record-breaking IPO. Check out the numbers, $75 billion raised. Almost 3x what we've got with Aramco, which was the previous record. A monster issue from Elon Musk and SpaceX.
Yeah, and it's being received really well, at least according to some of the shadow pricing that indicates about a 35% pop upside. We will see higher on and down at the NASDAQ, and we'll be tracking that when it does start pricing, I believe around 9:50, 10 a.m. Eastern time. Key question is, how does this set up OpenAI and Anthropic's IPOs? How does this set up the path of travel? Is there any early indication at a time when people are pointing to the fact that SpaceX doesn't make money, that they've lost a lot of money, that they are banking on a lot of more speculative promises? At the same time, Elon Musk has delivered and is a man of promise, and a lot of people, including a lot of retail investors, are getting behind him.
The lesson with Tesla, don't bet against Elon, right? And that might be the lesson with this. I would say for the others, for Anthropic, for OpenAI, so far, the window's still open. And we've put a lot of equity down the throats of equity markets in the last few weeks, not just with this, but with Alphabet as well. And a question we've asked repeatedly over the last few weeks, through June, is the window going to close? Going to get pushback? We've seen pushback, I would say, at the Oracle level around Meta, that rumor they might be raising equity capital too, but minor, margin pushback relative to the size of the overall market. And it feels like the window's still open for Anthropic to follow and OpenAI to come soon after.
Yeah, there's a feeling almost of smugness by bot investors saying, great, you guys could take some, because we've been taking it all down. And let me tell you, we have seen our index absolutely ballooned and concentrated with all of this AI-related assets. And now it's your turn. Over to you, equity folks. Concern, though, as we do this is the structure of the market. Yes, we are expanding the pool of assets that people are buying into, but also the correlations are going up, and significantly so. Where suddenly what you're buying with bonds is what you're buying with stocks when it comes to the corporate credit and the AI bet. And at what point does that get people nervous? How do you diversify? How do you find safety at a time of higher inflation, higher growth, and higher concentration of AI-related bets?
You made 2 points there. I want to pick up on the first one. We can get to the second one later this hour. The first one, the debt issuance that we've seen has been astronomical on the sovereign side, on the credit side, and they're clearly looking for options here. And that's the word I want to stress, options. Alphabet was going into different currencies here, there, and everywhere. We've seen it from other companies too.
Or we've.
Right? Going over to Europe.
Yeah.
Demand for that high yield debt, by the way, pretty decent from what I heard.
They're looking for a piece of the action.
Right? So you've seen a lot of this, and I want to keep going back to the word options. This is about really exploring the entire capital structure and having tremendous flexibility and having lots and lots of options. Not every company is going to get that. Only the bigger companies have got that right now, which is why they're in prime position to win this, because they can raise the most capital. It's about having options, raising capital, and spending capital really, really quickly, which goes to the inflation question I think you were getting at a little bit earlier on this morning. That's a lot of money being raised, pushed into an economy that is supply constrained.
For decades, this was a market where financialization was on the front burner. People wanted to invest in the market, make money, and then sit there and have a 401k that expands. Now people are taking that money and putting it into the real world, and suddenly they're building out infrastructure and metals and all of the physical assets. At a certain point, it's why people are expecting, particularly PIMCO, we have moved out of secular stagnation officially into a higher growth, higher inflation environment, and a lot of people are expecting a lot of different results from different assets.
PIMCO just published their outlook, and there's lots of headlines coming from it. Dan Iverson making some comments too. I think Dan said recently, someone I have tremendous respect for, we all do, in fixed income. He talked about the creative stage of finance and how we've entered the more creative stage of finance, and I think he's getting up something that you're following closely.
Well, the idea that SpaceX has IG-rated debt because essentially the equity pool is so big that it takes the first loss, that you're essentially at the top tier of the capital structure. It sounds a lot like structured finance, like mortgage-backed securities, like CDOs. The idea that as long as you have a bigger loss pool underneath you, you're safe at a time when there's a lot of big figures being thrown around.
Futures positive this morning by 0.6%. Coming up this hour, we'll catch up with Sarah Hunt of Alpine Saxon Woods on the groundbreaking SpaceX market debut. Nick Owens of Morningstar warning the company is significantly overvalued. On the other side, Matt Kennedy of Renaissance Capital on why the $1.7 trillion valuation is justified. We begin this hour with stocks pushing higher as Wall Street gears up for a historic day of trading. Bloomberg's Ed Ludlow joins us now for more. Ed, what a win for Elon Musk and everyone involved in this company.
Yeah, $135 per share IPO price, but it just needs to go higher 2.2% to 138, and Elon Musk hits trillionaires status per Bloomberg Billionaires Index in our calculations. Eyes on Gwynne Shotwell, president and COO, and Brett Johnson, the CFO at the NASDAQ. They're in New York City for this moment. And I've really enjoyed listening to the debate, the discussion, right, between you and Lisa and through your guests. This idea of, well, does it matter the current finances of SpaceX? One idea that a lot of the market had time to digest from the prospectus is that even though there's no cash flow number or current CapEx number, the connectivity business did hit almost $5 billion of operating income in 2025 and $7.2 billion of adjusted EBITDA. And a lot of people can extrapolate out from that Starlink business, the business of having satellites in constellation for internet, and because it's highly analogous with the proposed orbital data center business. So that final guest that you mentioned who says the $1.7 trillion valuation is justified, a lot of the math that is being done on the sell side and the buy side today is based on those numbers on Starlink. People believe it, John. How it trades is completely separate and academic, isn't it?
Ed, appreciate it. As I say, looking forward to the programme later. Bloomberg Technology, Ed Ludlow alongside Caroline Hyde. You get paid to hope and dream in the equity market. I think the point you're making, drawing the distinction between credit and equity, is that you don't get paid to hope and dream in the credit market. You just get paid what you're owed, and you hope you do further down the line.
Well, I was speaking with Howard Marks earlier this year, and he made this point. He said ultimately he believes AI is real. He absolutely does think that there are huge technological advancements that will come with it. But how do you want to get the upside to that? Probably through stocks, not necessarily through credit, where you're paid to worry. And if you really want to worry, there's plenty to worry about.
Well, for a moment, it was debt investors funding equity dreams, right? And now it's equity investors funding debt guys getting paid.
Yeah, potentially.
From what we heard a little bit earlier.
Also, debt investors still funding hopes and dreams. So
that too.
Funding everything.
A lot of money being raised. Here's the view on Wall Street this morning. Sarah Hunt of Alpine Saxon Woods writing, a weak open would be a real problem for the AI companies lined up behind SpaceX, waiting for their IPO moment. A strong one keeps the party going. Either way, it might be a volatile summer. Sarah joins us now for more. Sarah, good morning.
Good morning.
It's good to see you. This company waited more than 20 years to float. Why is now a good time to buy it?
Well, I mean, I think that there was an IPO window that we all knew way back in the day. We've had years where there was almost no IPO window at all. You've got equity markets at highs. You've got the technology enthusiasm at its highest level. I think this, if you're going to pick a time, this is not a bad time to do it, right? When else would you? And if you go back and look at how much public company stock has been taken off the market between buybacks and mergers, maybe there's room for all this issuance. Maybe not all in one go, but I think that there's more room than we think there might be.
It's one of those mornings where you can sound smart or make money. That's what it feels like. Is it one of those mornings for you? Do you want to sound smart or make money?
I think you always want to make money, right? In the end, you always want to make money. And I think that it's so hard to game out something like this because it has all of the things, right? It's SpaceX, so it's Elon Musk, so it's also all of the things that Elon Musk is doing. It's not just one thing. There's so many levers to pull. It's hard to figure out exactly where that is, but there's an enormous scarcity factor because this is the one that has all of that. So, this is one of those companies where ultimately, they have some incredibly promising technology. Is it worth what it's being sold for today? I don't know.
Neither do any of us, which is the difficulty right now. How do you even start to value a company like this? It goes to a question that we keep asking, where are we in this capital raising cycle, right? Are we at the beginning stages? Are we at the middle stages? Are we at the later stages as people start to get a little bit more prudent in terms of where they deploy their cash? Do you have a sense of how close we are to maybe people pulling in their purse strings?
Well, I think that one of the big stories for the last couple of years has always been the CapEx can't possibly go higher next year. It can't possibly go higher next year. And every year we're looking at it and it's going higher. And I don't know what the answer is. I do know that the technology, there has to be changes because energy usage, cooling, all of those things are actual real stumbling blocks to getting further and further capacity. So at some point, the technology will change. This is the problem with trying to figure out exactly where you are is because you don't know what's coming down the pike in terms of what's changing, but everybody's racing to get a whole lot of capacity together at one time. And I think that is hard to stop that juggernaut. And if the market's willing to do it, first it was just out of cash flow, then it was cash flow and debt, and now we're going to raise equity too. There's an enthusiasm for it, though, that if you believe that this is another industrial revolution or that this has got this much of a change factor, you're still going to have winners and losers. It's hard to pick who those are, so the enthusiasm is hard to overlook right now.
This morning when I came in, it was a positive story all around. You had potential de-escalation with Iran and the U.S., you had the potential for ongoing open arms in the capital markets, and correlations go to 1, right? We see gold prices up, not down. You see Treasury yields down, not up. All around, people are feeling enthusiasm and everything rallies. Do correlations start to worry you when everything feels like one trade?
Well, I think that we've seen this before in the last couple of big drawdowns and also some of the last huge risk-on moments. I think that the old correlation handbook that most of us grew up with has not been acting the normal way as much as we used to think it is. And so this goes down and this goes up. There is much more of an ongoing, like, it's all this or it's all that. It's all good, it's all bad. And I don't know that doesn't get better. It doesn't get any better right now. There is a little bit of a swap sometimes when technology is weak. You do see other things. Energy had been that. Now energy's down because we may get a deal, and we should hope for a deal. We absolutely want that to be done, right? Because that is something that's been overshadowing a lot. So yes, it concerns me that the correlations go there, but we can't control where they're going. We just have to watch.
You brought up Iran. We didn't bring up Iran, just for the record.
Just for the record, it is a big reason why everything is up. Did you see with the first announcement? Did you see the Kospi?
Yes.
Kospi going crazy because there might be a deal.
Just, it wasn't me.
I know,
okay.
I know. It was me. I own it. It actually is important.
I know how much you don't like the story.
I think that we can speak for all of us. It is a very frustrating story.
Let's finish on diversification and the difference between the NASDAQ and the S&P 500. Let's make this really simple. From your perspective for the next 12 months, do you want to be in the NASDAQ that has all these IPOs or the S&P 500 that doesn't? Because that's a decision that will confront a lot of passive investors this morning.
It is a decision that will confront a lot of passive investors. I think because the NDX is willing to take them sooner, you can do a both. You don't have to do an or. And I think that I think it's hard to say, I only want to do this or I only want to do that, given the fact that there is, in fact, a choice here. If none of them were going in there, it would be if they weren't going to any indices, I think it would be different on the passive side, because then you have to rethink that. But because you're given a vehicle to express both views, I think that you can do that to the extent that your risk tolerance is willing to take that hit.
Sarah, it's good to see you. It's great to catch up. Sarah Hunt there of Alpine Saxon Woods on this record-breaking day for Elon Musk and the team over at SpaceX. Equities this morning up by 0.5%. With an update on stories worldwide with your Bloomberg Brief, Isabel Lee has more. Hey, Isabel.
Hi, John. Elon Musk is poised to become the world's first trillionaire when SpaceX begins trading today. That's 13 digits. So his company's selling $75 billion of shares in an IPO that will value Musk's stake at around $690 billion. So when combined with his Tesla holdings and other investments in properties, his net worth tops $1 trillion. And teachers in one Louisiana school district will be receiving massive bonuses. The Wall Street Journal reporting that teachers will receive more than $50,000 this year thanks to increased tax revenue linked to a Meta data center. And in sports news, the World Cup is officially underway. Mexico winning the first of 104 matches, the co-host defeating South Africa 2-0. The United States plays its first game against Paraguay at 9 p.m. tonight. That's your Bloomberg Brief. John?
Isabel, thank you. There's plenty of space for rants over the next month about FIFA and this World Cup.
I think this is space right here.
Some of the empty seats yesterday evening, I've seen the pictures of it. It's such a miss to come out and try and make as much money as you can from wealthy Americans from selling seats to this World Cup without having a long-term strategy about the sport in this country. In fact, I just think it's really bad business of FIFA. And I'd love to speak to them about it because to me, for me at least, living here, I thought this was a perfect opportunity to grow the sport, to get more people engaged in the game. And then if you do that, guess what happens? You can sell your TV rights for more, right? More people start to play the game, there's more interest, you can leverage that. This at the moment, I hope it changes and I hope it picks up in a massive way. I want this to be very successful in this country, but what a miss. What a miss.
FIFA is the inverse of what we're seeing with SpaceX, which is essentially cash flow incredibly rich, promise poor in terms of just how much it's expanding its total potential revenue pool, versus SpaceX, which is cash poor, but potentially, the sky's the limit, literally.
Compared to 94, where this country really wasn't ready to host the World Cup and didn't have much.
Now people want it.
Precisely. They wanted it. They wanted to engage.
Oh, yeah.
Then it just felt like FIFA just told you can't afford it.
Well, yeah, and to all the cities.
It's not meant to be a rich person's sport at all.
Well, did you see the stadiums filled in Los Angeles and Mexico City with people in sort of other sites, off-site, just cheering, absolutely tearing the place down? That's the kind of energy that you want inside the stadium. But, FIFA, ka-ching.
Yeah, big time. Short-sighted. Anyway, Up next on the programme, the Morning Calls plus Nick Owens of Morningstar warning of the risks behind the SpaceX sky-high valuation. From New York City this morning, good morning.
There's an average multiple of sales to price of about 10. For every buck that you generate in sales, you get about $10 in valuation. These guys at SpaceX are at 99, the highest I've ever seen, a 2,000% premium for Elon Musk. The average retail investor is massively overpaying it. They're totally overvalued, and it's so obvious.
That was a skeptical view. That was from the LiveSwitch founder and chairman, Brian Hamilton, a little bit earlier on this morning. Very, very vocal about what he thinks of this IPO.
He was the way that he put it into just what it would be in terms of an annuity, $80 billion or something guaranteed every single year, gives you a sense, speaking from sort of bond space,
yes,
of why there is some skepticism. And people coming from the equity space who are really enthusiastic are saying, really, the market share is potentially astronomical, literally, and potentially you're seeing the monetization already when it comes to Starlink, when it comes to even XAI to some degree.
That's the hope and dream story.
That's the dream.
Behind the order book, which is astronomical in and of itself for this IPO. Equity futures right now positive by 0.5% on the S&P, on the Nasdaq up by 0.4. That's the price action. Here are your morning calls. First up, Citi upgrading AMD to buy, saying its GPU upside is not fully priced into shares. Your second call from Evercore, downgrading Adobe to inline from Outperform, saying investor sentiment is unlikely to turn positive until it makes changes to its C-suite. And finally, Wells Fargo raising its price target on Qualcomm to 230 from 160. Wells keeping an equal weight rating on the shares ahead of Qualcomm's Investor Day. The stock is up by 0.7%. Let's turn back to SpaceX. Nick Owens of Morningstar noting concerns on the outlook for the stock. He writes, we value SpaceX at $63 per share, a 53% discount to the upcoming IPO's offer price. Nick joins us now for more. Nick, welcome to the program. Market cap's at 1.8 trillion. You're at a fraction of that, Nick. What goes into your calculation as you think about what this company's worth?
Thanks for having me. Thanks for asking. That $63 number is a blend of a handful of scenarios, one in which XAI may not work out, but in 57% of our scenarios, we believe that Starship is highly reusable, and we believe that the data centers in space will be competitive and increase, take a meaningful market share. The issue is that in only 7% of the scenarios that we ran, do you get kind of this let's say, dominant business outcome in XAI. That actually results in a $1.9 trillion valuation in our model. It's just, we won't know for another year or two how reusable is Starship and how commercially competitive are data centers in space.
Nick, difficult question, because I know it's almost impossible to answer, but how much is the Elon Musk factor worth here to this company?
Certainly, as you guys were talking about before, in terms of enthusiasm and appetite for the shares, I think there's a big Elon Musk factor or premium there. I don't have a line item for that in my model, but the way I think about it is in terms of these probabilities of the engineering working out, them being able to do these things, and even being able to make them commercially competitive because they have such a cost advantage in their rocket and satellite business. They could potentially extend that into the data center business. And so I would argue that these probabilities that I was telling you would be much lower for any other company.
Nick, do you get a sense that people are conditioned to the prior experience of recent earnings at other tech companies, which have been astronomical and have been growing at a much faster clip than people had expected, to sort of suspend belief and say, look, this is somebody who knows what they're doing. They are increasing their revenues in certain pockets at very steady clips. Maybe they see something that we don't in terms of the promise, and frankly, they've delivered in other aspects before.
I think, you were talking, I would say Starlink is an example there where they might outpace expectations because adoption is very fast. We have a very robust forecast for Starlink. We don't think that their addressable market is quite as big as what the company claims, but a very strong business, that will drive operating profit and cash flow for the company. In terms of I think folks will be very much looking forward to the Q2 earnings here in July, just to see what those kind of rates of growth are going to look like.
Do you get the sense it's just getting harder to value things right now at a time where there's essentially an industrial revolution underway and a lot of companies are coming to market, are going public after already being private for a much longer period of time?
It's an interesting point. In the case of SpaceX, I would argue the rocket and Starlink business are way more mature than your average IPO or what we think of when we think of an IPO, whereas I would say XAI is perhaps a bit more in startup mode. So you're kind of getting a blended mix of what's normal for an IPO. As people have noted, this company was founded over 20 years ago, and so it's a bit unusual. Harder to value. Morningstar does it in a consistent way. We look at the free cash flow to the firm, and I find that very reassuring.
Nick, can I just ask you a basic question? Forgive me, but what is worth more? If this company just decided to focus on, say, AI infrastructure, if it focused on being a neo-cloud company, whatever it was, if it just focused on doing that and got away from the model business, which seems to be really capital intensive too and costs lots of money, and stopped competing with Anthropic and the likes of OpenAI, what's worth more?
I'll be honest with you, the model, the scenario we ran is essentially that this is an infrastructure play. Put another way, whether they're renting their capacity to third parties, as you've heard they are doing with their Colossus data center, or using it themselves and then getting, let's say, subscription or enterprise revenue from the LLM. For the moment, I'm kind of agnostic as to that. It's really just what is the payoff for building out all this infrastructure. And I think of, in the very long term, this is almost like Elon Musk, building the railroads to space. It's beyond data centers, talking about Moon and Mars and so forth. So I thought of it really more as a long-term infrastructure build out, if you will.
Interesting. Nick, appreciate it. Thank you, sir. Really thoughtful conversation. Nick Owens there of Morningstar going through a range of scenarios on how to value this company.
It's a really interesting point, especially because a lot of the revenues coming from AI are tied to Anthropic's renting of their infrastructure to try to deploy as quickly as they're in demand versus, say, the XAI AI template that they're building out in terms of models. So if this is an infrastructure play, it's a more cohesive bet in terms of putting data centers in space, in terms of the satellite connectivity, and in terms of the neo-cloud business. That said, that's not what they're promising. They're promising something else, and they're putting a lot of money into the modeling to compete directly with the likes of Anthropic and OpenAI.
We'll get the more constructive view in just a moment. We'll catch up with Matt Kennedy of Renaissance Capital on why the SpaceX valuation isn't just hype. Equity futures this morning, positive by 0.4%, with the opening bell about an hour and 5 minutes away, with your equity market on course for another week of gains. Up by 0.25% on the Nasdaq 100, encouraged by this move in crude. Oil lower, Brent down by close to 3%. WTI as well, Brent crude 87, WTI 85. The president telling us we're getting closer and closer and closer to a deal. The opening bell about 60 minutes away. Equities up here by 0.4%, up on the week through Thursday at the close, adding some weight to the rally, higher by 0.2% on the Nasdaq. The move fading just a touch, going into this record-breaking IPO from SpaceX. We'll spend some more time on that in just a moment. I actually want to spend some more time on the bond market, which has really stabilized in the past few sessions. Held down by crude. Yields at the front end of the curve up by just a basis point this morning. 2's around 4.07%. 10's around 4.47, up a single basis point. Of course, this morning is all about a big equity offering. The IPO still to come from Anthropic, from OpenAI. Next week's all about the Federal Reserve. Kevin Walsh, a man who we really don't know much about in terms of what he stands for, what he believes right now for monetary policy.
If there is some sort of conclusion to the Iran-U.S. fighting, does that give him a bit of a breather in terms of how rapidly they have to at least tighten verbally some of the policy? The expectation is that there will be a dropping in the easing bias, which a lot of people can't believe is still there. At the same time, notable how wide the gap is, the delta between what we just saw from the ECB, which was not only hiking rates for the first time since 2023, but indicating that further hikes are likely. And this morning, it is interesting that even though you are seeing somewhat of a relief sense in the U.S. bond market, it's barely a relief at all. And in the German bond market, you could see an absolute rip-roaring rally as people say, okay, at least this might take the pressure off the ECB to have to do so much. So Let's see what Fed Chair Jay Warsh stands for. Jay Warsh, because, Kevin Warsh, excuse me. Jay Powell will be governor.
Jay Warsh works.
I think that's kind of what we're going to be dealing with.
There.
Jay is still there, and he might give a speech as well. But I'm
hybrid
curious to
Federal
see.
Reserve.
And then we get commentary from them, which I think will be really great.
Yeah, I agree with you. Crude looks like this: 88 on Brent. We're pulling back to 85 on WTI, down by 2 to 3% off the back of the imminent deal. We're told repeatedly is close, very close, I'm told, in the last 24 hours. That would be my conversation, I think, for next week around the Federal Reserve, at least my question. How narrow is the inflation conversation at the institution right now? Is it all about energy and the potential for energy to spill out and become embedded in other prices? Or does it go beyond energy? They're seeing price pressure elsewhere that they are becoming increasingly concerned about.
The discussion on Wall Street very much is the latter, not the former. It's, yes, energy is definitely an input, but at the same time, people are able to absorb those higher costs, and you're also seeing it from some of the data center build out. So at what point are you looking at just an underlying resilient economy that doesn't require at least no more accommodation and potentially a rate hike?
Got to set expectations for communication as well. So the headline crossed. There will be a news conference, like that was news, right? There will be a news conference next week.
There is a question.
How long will these news conferences be? How many questions will they take? Is he open to having news conferences at every single meeting? Is that something he's rethinking? The speeches, how often will we hear from him? How often would he like other governors on the board to speak? And how much control does he have over regional Fed presidents, which at the moment is not much?
To me, that's a key question also. How much is he going to clamp down on the idea of this being a multitude of voices versus really driving from the top? Right? How far can he go with some of his decisions about changes, given the fact that he's just one person among 12?
That quote, inflation is a choice. Someone in the news conference is going to bring that up. Inflation is a choice. Yeah, precisely. What's your choice?
Yeah,
what's your index?
Yeah, exactly. Is it an index choice or is it a choice when it comes to how far you crack down on it?
That's the story for next week. Let's turn back to our top story for this morning. Counting down to the SpaceX trading debut. Wall Street gearing up for a historic trading day. Yahara joins us now from the NASDAQ for more. Yahara, welcome back to the program. It's a big few hours coming up where you are. What do you see now?
Exactly, John. So just to give you a sense of the anticipation here at the NASDAQ, we've already seen some key SpaceX figures arrive. I just spotted President Gwynne Shotwell downstairs sharing some laughs with CFO Brent Johnson as they chatted with other folks here at the NASDAQ. Elon Musk's mother, May Musk, also just walked in ahead of them. So the anticipation is building here ahead of the first trade. We have heard from the NASDAQ in the last hour that SpaceX will be eligible for trading at 10 a.m. Eastern, but we probably won't see the first trade until hours from then, as underwriters will still be working to match buy and sell orders in that price discovery process. And one of the biggest questions this morning is how much demand is still sitting on the sidelines. As we reported, the deal was more than 4 times oversubscribed. Retail investors alone are said to have placed more than $100 billion worth of orders, but only a fraction of those requests will actually be filled, which means there could be a large pool of investors looking to buy shares once trading begins later today.
Yahara, appreciate it. Thanks for the update. Yahara at the NASDAQ ahead of the pricing of this IPO, the trading of this IPO later this morning. The company's sky-high valuation raising major questions from investors. Matt Kennedy, the senior IPO market strategist at Renaissance Capital, writing, this valuation isn't just pure hype. A fundamental case can be made to justify it. Matt joins us now for more. Matt, welcome to the programme. Been looking forward to this conversation. We've heard from a lot of skeptics already this morning. Let's get to the constructive view. How do you justify this valuation?
Right. Well, it'll be an expensive stock in the near term, but our numbers have it looking pretty decent on 2029, 2030 EV multiples. So, it's going to be a tough ride, a rocky ride to get there, and it can be uncomfortable to value a company so far into the future, especially in this space. But if it hits those numbers, this stock could even look cheap.
Well, Matt, let's focus on revenue, how much money they're making at the moment, what growth has looked like over the last few years, and the numbers you're thinking about in the forward years, next year, the year after that. How much growth are we going to see in revenue?
Right. We only saw, 15% revenue growth in the first quarter. But this is not going public off of its most recent quarter. It's going public off of what it can do in the next few years. And we're expecting it to more than triple revenue in the next 2 years. That would give us more confidence in this valuation. And how can it do that? Well, a lot of it's already underway with that Google and Anthropic deal. And then, if they can get Starship underway, if they can continue growing in the connectivity Starlink space, I think they can get there.
Key question, Matt, where exactly is the revenue going to be coming from, and does it matter? Does it matter if it's mostly a NeoCloud story or if it's mostly a Starlink story that does propel the earnings higher?
Most of the revenue is going to come from the AI side, likely. At the same time, Starship V4 is really going to be that keystone to the company's plans, with connectivity drawing the most EBITDA in the near term as well. So on the top line, I think AI, but you really can't discount the other two pillars here too.
How much more different is it to try to value some of the companies that are IPOing right now versus, say, 5 years ago?
Yeah, I mean, it used to be easy. You could just look at any software company and then the 10 closest comps. This feels like new territory. Like I said, we're not comfortable. We're not usually going out to 2029, 2030 numbers, but you kind of have to. This feels almost more like a $1 trillion venture investment. And I expect the same will be true of Anthropic and OpenAI.
Matt, what do you do when it comes to total addressable market? The TAM of this company, when you start thinking about going to outer space and there's not much competition, just sounds insane. Some of the numbers I've heard over the last few weeks just sound almost made up, Matt. Where did the numbers come from?
I'll be honest, we always discount the TAM pretty heavily. We see very inflated TAMs in prospectuses. So we kind of take that 20 plus trillion TAM, we kind of set it aside and look at what the company's been able to do and where we think it can go. We kind of disregarded that 20 trillion plus enterprise AI. But, you know, I think there's no question AI infrastructure is huge and growing. The potential for the Starlink is already very established and growing very fast.
Matt, can I ask you, we were talking about growth, and clearly the IPO is not priced off the trailing years, obviously. We're talking about the hope of the future. But Matt, I am interested in the growth levels coming into this listing. Why aren't we seeing aggressive growth? And why is it going to change quickly in just the next 2 years?
Yeah, I mean, I think the launch business has really been focused on bringing those satellites into space, helping the connectivity, the Starlink business out. And then on the AI side, that's mostly been plowing money into CapEx, and now it's finally at that inflection point. And, you know, those deals with Google and Anthropic have given us confidence. The fact that Google is also raising billions of dollars to build out its own data centers and other companies, I think they're in the right space. I think a case could be made that, you know, it's a bit risky to build out all of this infrastructure. You know, what happens if there's overcapacity? But for now, you know, pedal to the metal, it looks like the smart play.
Matt, you agree with some of the skeptics. And at one particular point, you said that this looks a lot like a $1 trillion venture capital bet. Do you think it's appropriate that this go into a lot of the indexes and be available widely to retail customers at a time when essentially it has a characteristic more of venture capital than, say, traditional equity?
Well, you know, I mean, you could take a look at Tesla. That took a long time before it got into the S&P 500. There's all sorts of, you know, growth companies, mature companies. So I would say that there's a spectrum of what's appropriate for what goes in an index. And this company kind of feels like a growth company on steroids. So I believe it can justify its $1.75 trillion valuation. I wouldn't say it's, you know, inappropriate to be going into indexes whose, you know, goal is to track the market. If people don't want to own those index funds, they can certainly sell.
Matt Kennedy, appreciate it, Matt. Thank you. That's a choice people will have to make. Matt Kennedy of Renaissance Capital, a growth company on steroids without the major growth just yet. And perhaps that's going to change in the next few years.
You're betting that it will change in the next few years. People keep pointing to the index composition, and you were alluding to that with Sarah Hunt earlier, the idea that the NASDAQ is going to be including this and that the S&P isn't, and that it will include the divergence between those two indexes, with the NASDAQ much more levered to the AI bet than, say, the S&P. How much investor education is going to have to go into this, though, too, so that people truly do have a sense of this? Because when you think about the U.S. index, equity indexes, they've gotten further and further away from the underlying economy as time has gone on. And do people really fully understand that?
Well, right now, we're getting closer to the underlying economy because this economy is just AI and CapEx right now, isn't it?
That's a great point. In terms of the strength points, yes. In terms of going to the grocery store, well, maybe. I mean, it depends. Maybe AI is picking my blueberries.
Yeah. Hopefully those blueberries get cheaper for you, Bramo. I know how personal that feels.
It does. Those big blueberries, they're fantastic. But
if they're really big, they're not organic, are they? You know, like those monsters you get sometimes that turn up.
Do you care? Yeah, you care.
Oh, yeah, of course.
No, I'm just like, they're delicious.
Oh,
they're
you
delicious.
like the bigger ones?
You know, it depends. The really small ones that are like
organic,
I mean, if they don't taste good, they don't taste good.
SpaceX, let's get back on track. Futures fading just a touch. Equities right now up a third of 1%. Let's get you an update on stories worldwide with your Bloomberg brief. Isabel Lee has more. Here's Isabel.
Hi, John. The U.S. and Iran may be nearing a deal to end the war and open the Strait of Hormuz. President Donald Trump saying a deal is imminent and could be signed in the next few days. An Iranian Foreign Ministry spokesperson saying, quote, "We have not reached conclusion on this matter yet." And OpenAI's ChatGPT reaching 1 billion monthly users in May. According to Sensor Tower, the app became the fastest ever to reach the milestone despite growing AI opposition. Other apps like Anthropic's Claude made triple-digit year-over-year gains. And in sports news, the Knicks are heading back to San Antonio as they look to close out their series against the Spurs. They're one win away from their NBA title since 1973. And teams up 3-1 in the finals are 37-1 all-time in league history. Game 5 tips off Saturday night. That's your Bloomberg brief. John?
Isabel, thank you. Thank you for the update. Up next on the programme, setting you up for the day ahead. Plus, we'll catch up with Dan Niles of Niles Investment Management, saying things could get dicey down the road for this big company.
It's SpaceX, so it's Elon Musk, so it's also all of the things that Elon Musk is doing. It's not just one thing. This is one of those companies where ultimately they have some incredibly promising technology. Is it worth what it's being sold for today? I don't know.
Place your bets accordingly. That was Sarah Hunt of Alpine Saxon Woods on the major IPO that's set to start trading a little bit later this morning. Equity futures shaping up as follows. Positive by 0.2%. The rally's fading as we get closer and closer to the cash open. The Nasdaq just about unchanged. Going into the opening bell, what a week we've got lined up for you. A little bit later this morning, this trading debut for SpaceX. Should expect that around 10 a.m., perhaps, possibly, even later. And then, a little bit later, 9 p.m. Eastern Time, Team USA playing its first World Cup match. We'll give you an update on that, no doubt, over the next few weeks. World Cup mania taking over Mexico, America and Canada. Then next week, too, G7 finance ministers and leaders, of course, all getting together. G7 leaders meeting in France. Wednesday, FOMC rate decision. Kevin Walsh news conference, the main event, about a week out.
Yeah, and it sort of sets it up perfectly with the G7 meetings, given the fact that not only potentially could we see some sort of deal signed between the U.S. and Iran, as some people were talking about this morning, but also a lot of the big tech leaders are going to be at that G7 meeting, which highlights sort of the two big components that are at play for the new Federal Reserve Chair, Kevin Walsh, coming in and having to figure out exactly what's causing the inflation. Is it the energy side of the picture? Is it the tech build-out kind of the picture? And how do you view monetary policy at a time of incredible technological change?
Regulation conversation about taking stakes in some of these companies. Very different attitudes in Europe compared to, say, the US about what's going to happen here.
I think it was very important for these guys to get on the plane, which is the reason why they're all showing up. You can imagine some of the conversations. I want to know their calendars. Who are they meeting with? Exactly what the tenor of those conversations are. I'm guessing it's more on the regulation side than it is with these leaders than, say, on the buying a stake.
I would suggest also that some of these executives believe they are the masters of the universe as well and think that that's the group they should be running it.
Right now, the market is treating them
like
as masters of the universe because their total market cap right now exceed by multiples most GDPs on this globe.
Let's talk about the massive success of SpaceX and Elon Musk. What a turnaround in fortunes for this company that's gone through some difficult times at times over the past few years. Bloomberg's Ed Ludlow joins us now for more. Ed, we'll see the first trade a little bit later this morning, but let's spend some time on that. How much work Elon Musk and the team is dedicated to this company to get it to where it is today?
Yeah, in 2002, when it was kind of seeded, I think it was at a $27 million valuation. And, you know, it was very close for quite a long period of time to bankruptcy and failure. And, you know, they had just enough cash and gear to get one rocket together and it blew up. And fast forward to present day, the valuation that we're all debating, the trajectory of the valuation in the context of price to sales, however you want to measure it, is not predicated on that rocket at all. It is predicated on a story they've pitched investors, on them becoming an enterprise AI company, like completely different. Really interesting, though. Like, this is such a big moment in time because it's literally the biggest IPO in history on dollar raised and valuation. This isn't the end of the capital markets story for SpaceX. It's just the beginning, right? And so that's such an interesting psychological consideration. They're pitching a business that doesn't yet exist. No one's talking about the success of the current business, which is Starlink, cash flow positive, and basically being a neo cloud where they rent computer capacity to Anthropic and Google. And at the same time, you know, why are they raising $75 billion? John, they need capital. And part of that's to pay down existing debt. NASDAQ is saying quotation 950, eligible for trading at 10 a.m. Eastern. One thing I would note is that's completely standard for tech IPOs on the NASDAQ. This isn't a standard IPO. And so, yeah, buckle up. Interesting few hours.
Certainly not standard, that's for sure. Ed, thank you, buddy, and thanks for the coverage. Dan Niles of Niles Investment Management has this to say. It would not surprise me to see the stock trade well initially. After that, however, I think it gets a lot more dicey. I'm pleased to say that Dan joins us now for more. Dan, welcome back to the programme. Why do you believe this gets dicey from here?
Well, I mean, if you look at it over the first 15 trading days, you've got additions to all the different indexes coming up. The earliest one, you can add it in, is 5 days. The NASDAQ 100, you can add it in to that index in 15 days. And so that's going to force a lot of index buyers in and then closet indexers within the mutual fund community. I think after that, valuation matters. So, I mean, if you can pull up a chart of the ARK Innovation ETF, ARKK, over the last 10 years. If you go back to 2021 and you look at that, it is down 50% from its peak in February of 2021. Tesla over that same time is up about 50%. But if you put it into the S&P 500, you would have doubled your money, including dividends, since that peak in February of 2021. So that shows you the dangers of buying stocks at valuations that are astronomical, because they will get corrected, but it takes some time. And so that's the way I'm looking at the SpaceX IPO. I mean, don't get me wrong. I think Elon Musk is the Thomas Edison of our generation. But at 90 times revenues, which is where the IPO price is, it looks like on Hyperliquid, it's at 180 or so. So that'd be 120 times revenues. This is like buying the ARK Innovation ETF, in my mind, at its peak in February of 2021.
Yeah, Dan, it's the revenue piece of it that I want to spend some time on with you. Clearly, trading revenue, this number is a monster, more than 90 at IPO. And as you indicate, after the rally, it's going to be higher than that. But the hopes and dreams are about the forward years, of course, just by definition, Dan. Dan, the growth numbers coming into this, that's the piece of it that gets my attention. We will pay up for growth stocks if they're generating lots of growth, but you don't see that right now with this company. And Dan, what I've been told this morning is that in the next 2 years, that's going to change really quickly because they can leverage the investments they've made. Dan, what are your thoughts on that?
Well, and that's true, but you're leaving out one important piece, Jonathan, which is they've said they're going to need to spend hundreds of billions of dollars to make that happen, to be able to get to that 28.5 trillion in TAM that they believe is the largest in human history. But look at what's happened with companies we already know very well that are trying to do that. So Google went out and did a capital raise. The stock's down 6% just in the month of May. Amazon also selling the largest corporate bond offering ever in Canada. That stock's down 11% just in the month of May. And go to yesterday, right? Oracle results came in, those were fine. But the CapEx came in a lot higher than what people thought in terms of their guidance. That stock was down 9% yesterday. It's down just 18% just in the month of May. So you already, and then Meta, obviously, since April 29th, when they put out their results, they again cranked up their CapEx relative to expectations. Expenses went up. That stock's down, I think, 15% since they reported results. The S&P's up 4%. So you can make the assumption that once you get out of this first 15 days of trading, when there's forced buying due to these index inclusions, the stock keeps working. But I look at investing as risk versus reward. at 90 times revenues at its IPO price, over 100 based on what it looks like it's trading in some of these other markets, it's just not there. You can buy other companies, to your point, Jonathan, that are growing a lot faster, that you can get at very reasonable valuations that, have positive cash flow.
Just real quick, Dan, I'm curious if this is sort of an indication of how things are going to be valued for OpenAI and Anthropic, whether this sort of indicates the peak in the sense that all these companies want to raise as much money when the window is as wide open as it possibly can be.
Yes, you hit on the exact point, because money right now looks infinite right up until the point it isn't. So is the fact that Google, Amazon, Oracle, Meta are all having pretty rough periods of time as they're raising capital. And these companies actually, on an operating basis, generate lots of cash flow. Don't forget, SpaceX, on a net income basis, is losing a lot of money. They lost more in the first quarter than they did in all of last year, and that's just net income losses. I'm not even layering in CapEx. So to your point, which I think is a really good one, now you've got 3 of the biggest IPOs in history lining up. And is capital infinite? I think based on how things have traded in May off the capital raises of, established, very profitable companies, I think you're kind of figuring out maybe capital isn't infinite.
Dan, appreciate your time and really valid points. Thank you, sir. Dan Niles there of Niles Investment Management. Dan is absolutely right. We've been tracking the same story, the pushback, just the report that Meta might raise equity capital last Friday. Equity sold off. Saw it with Oracle on spending, saw it with other names through the week as well. That's the stress that's starting to emerge. Not broad-based, but signs that you're getting some pushback in capital markets.
We got it at the end of last year when they announced the CapEx plans, and then Meta in particular sold off really dramatically. And then it resurged when people started to look at some of the profitability and how it was coming out. This is a tough story to get your hand around, which is a reason why it's been really wonderful to listen to all these different points of view this morning.
A record-breaking IPO from Elon Musk and a team over at SpaceX. Trading should begin in the next few hours. Equity futures fading just a touch on the S&P 500. From New York City this morning, good morning. Have a wonderful weekend. This was Bloomberg Surveillance.